Good morning, pajama traders. Wednesday, February 10th, a few days before Valentine's Day. Again, for basically everyone here, that means you're getting something for your mother. Get those flowers ordered. But what's going on, guys? I'll tell you what, I see a lot of green. I see a lot of green. A Tesla, exactly. If you didn't already get your mother a Tesla for Christmas or her birthday, get your mother a Tesla. You know, she likes the SUV side of things. Get her a Model X. Get her a Model Y. She likes to live in the fast lane. Give her the S. That sounds kind of fucked up, actually. Maybe we shouldn't talk like that. It's kind of messed up. Too many letters, and you never know where these things are going to go. But anyways, futures continue to climb. I was watching some of the Hang Seng action last night, posted the chart with some levels. They were doing exceedingly well in terms of the tech side, which, again, doesn't necessarily mean that our tech is going to be taking off today. It's certainly trending to the upside. But, again, the biggest winner is the small boys, the small caps. Russell 2000 continues, that favorite IWM chart we like to look at. But overall, everything's up about 0.5% or so. This action here, this candle that you see over here, 8:30, 15-minute candle, about 22 basis points on the S&P or the E-minis we're watching. We're gonna see what this looks like coming into close or into open. Get 30 minutes to open. In terms of this, I mean, think about it, right? Think about where we are. We have, for 8 days now, been trending to the upside. This is 8 days. This is basically the best since, I guess November over here, right? This is the only thing I can really be reminded of. Now, the difference here, there is a big difference here, right? There was a big policy shift from the election, which we talked a lot about in terms of value now being on. Before this, value was not doing anything. Right, the market was consolidating, but value also was not a hot sort of ticket item. That's where that November 9th, that sort of infamous candle on almost every single chart you look at, November 9th, had a rotation day. And it was probably the most, again, it is the most rotation that's basically ever happened in the market, right? And I talked a lot about that, and it does sort of, it's an eye drawer on every chart, besides obviously this wick that will not go away because of that one big order on the S&P. But anyways, the big difference here, again, is that the difference between these two sort of moves to the upside is that we had a big rotation that happened. And we're not likely going to get a candle like that up here. So we don't need to really worry about this kind of idea. Not that it really caused anything, but it was such a tidal shift in required a lot of action. We're not really expecting something like that. If there's going to be a drawback, there's going to be a drawback at some point, right? But it's not going to be in this sort of fashion where you're really just hoping that you're in the right spot. No one here is hoping about anything. I think everyone here is pretty satisfied with where we are in position and pushing positions. We're in the right spot. We're continuing to push. There's no reason to get out. You know, you've got all these different commentators acting like since there should be a correction that they need to get out before then. Imagine not riding this through to the upside. Imagine not getting these gains every single day. Look over here in the pre-market numbers. Let me just refresh this a little bit. APHA, 25%. FUTU, 20%. QFIN, 14%. MJ, 13.5%. Lyft, 11%. Faru, 11%. Twitter, 10%. HPI, 10%. VFF, Open. On and on and on. How many of these tickers have we looked at every single day? And how many times have we made jokes about some of the alerts and everything? This was an alert yesterday. This was an alert yesterday for a transition on the trend line. We not only got 25% yesterday, it's now 25%. That's 50% for those of you that are on your calculators. FUTU has just been a continuous trend. This is not something that's easily traded, so we're not going to use that as a good example. QFIN yesterday, one of the 29 alerts. Through the top trend line here, it up to the inbound trend line. We talked about this move is now up 14%. Pot stocks, we have been trading since that November shift that we talked about. This is the ETF, guys. This is the ETF, where we entered this because we wanted to mitigate risk and have a little bit additional liquidity on the option side especially. We bought in at support. Now, we talked about transitions yesterday, and we've been talking about it a lot. We talked about transitioning up here on the trend line yesterday. We knew where we were going, and now look, we are. We're at 33. We're opening at 33. We're way up in here. Do you know what this gain is over here? It's quite a bit. It's quite a bit. It's almost that coveted 69%er. Almost 69%. We're high. Yeah, we're high. You know there's somebody, where's McKeesus? You know McKeesus isn't in here because he's high. Because of the chart. Lyft. Uber. Did we not just talk about this? Is not half the chat in the Uber trade? Do we care that it's earnings? Anything like that? Yes, price usually runs up into earnings, but do we care? Is that really the reason why we take these type of trades? Probably not. Veru. Have we not taken this trade almost every day? Let me log it so we can see it. No, you can't really see it on there either. A little bit too much price action. Again, don't sleep. Twitter. Come on, guys. Come on. Was this not the most obvious trade that we've seen? We knew the relationship with Snap, the rotation that happened, the break through the trend line, Snap, then Snap back. Get it? This trade, all of these. Open is going to be opening pretty damn high. This is going to be a tough trade to enter, but we're going to go for it. We'll see how that looks. SPSW, ENPX, we talked about bios. Retail stores. We were taking all the retail stores over here. So you see, obviously, here's the Uber chart in relation. Again, the break that we talked about, the open on the 55. That was the trade that we took. I'm pretty sure that was live on that day. GRWG, of course. Bidu, right? Chinese tickers, we've continued to be hot on. MP that I posted last night. So MP and open are both pre-market gaps. So in terms of this situation, again, do not be afraid of gaps. I think there's too many times that, I mean, I know for sure. I'm not just assuming. I know for sure that there's a lot of difficulty in terms of entering on opens that, you're opening 5%, 8%. How do you handle that situation? Again, it's one of those situations. It's either going to be bid from the start, which means you have no downside risk if you're entering from the start, or if there's going to be that slight pullback. All you're waiting for is that reversal that you see tightening. As long as you see all the sellers get filled, right, and you're going to see tightening, you should be able to see that on the underlying. You can see it on the underlying, and if not on the underlying, you should be able to see it on the option side, where even if this price is pulling back, as soon as you start to see it tighten a bit, you can look at the options, and if the options are continuing to go bid, you can get in there. You have downside protection. No reason you can't take that trade based on what we know that they're very bullish, right? Now, there are a lot of other positions here that are doing well pre-market. I don't think we need to go, over all of them. But again, the one thing I will continue to say here is that the newer charts that I post have continued to be the most bullish because of where the market was coming from last week, that pullback week that led into the short-term trading into the long-term. It broke a lot of positions out of consolidations. So even like the JWS position I posted last night, these are a lot of SPACs and everything, right? I'm giving you guys a little bit of your own territory. I know you guys love SPACs like the rest of the market. There are some very good technical trades here. The trades that we just looked at, the MP, the Open, the JWS, these trades are, they're decent technical trades, right? These have a lot of potential, I would say, not because of your fundamentals, but because the technical is there. The levels are there. There's buyers there. Whether it's hype or not, I don't care. I don't care what this company is. I like the name, Jaws. Great. We'll make a meme out of it. But I don't care about anything other than the fact that the levels are there, the trend is there. I can see two converging levels of supply. That's it, right? We keep it simple. We trade on what we know. There's a lot here, guys. There's a lot here. We did talk about these candles a little bit. I just want to mention we did talk about these sort of upper shadow candles yesterday at close. If you weren't here, we usually talk about a candle like this being bearish if it's coming out of an uptrend. Those short-term patterns that we talk about. The overall theme from some of these, though, is that if the overall chart itself, based on classical patterns that are breakouts, and if it's overall trending to the upside, usually means that that short term is not enough to overtake the overall chart. So you could do it like a point system. If every classic pattern is like a plus 10 for bullishness, short term patterns would be like a minus 1. And so that's how we sort of have graded this a little bit. So I talked about that actually these, even though traditionally they're a bearish candle because it's a bit of exhaustion, it's actually pushing price to the bid side. It's that upper wick on a sell day is actually trying to break out further, which means there's actually good buy chances for the next day. And so you can see something like Teva's up 3%. It's not even opening lower, right? So something just to keep in mind. Now, it's not always going to be the case, right? Usually this is going to mean something. And like yesterday, we had those bearish short-term patterns lead to opening a little bit lower, but then price went anyway. Because overall, we're bullish, right? We are bullish. So, I just want to mention some of those. And again, it's a green day. Today's a green day, so we're looking very good. Anyway, okay, hold on. What did we get there? Was it saying something about something being blurry? Does anyone see that this is blurry? Before we start, make sure the quality is good. When you go to the charts on the stream, the ticker names on the top right are blurry until you stop moving your mouse. Looks good. Okay. Wiz, it's because of your own screen. It's because I'm streaming it in 2K, so it may be because of your monitor. Sometimes it's blurry. This up here, guys? Which one? Which one? This ticker name up here or over here in the watch list? Top left? Okay. I don't think anyone actually gives a shit about those, so. I think it's when I come off the screen and I go to another screen, like even down here, these numbers down here, I can see them flashing. Are those flashing the dates down at the bottom? I'm guessing you guys see that as well. We don't see it on the recording or anything, so it's when I don't click on a window. Thank you for mentioning it, and just let me know if it's not actually a 2K through Discord. It's only 1080. That's the problem. I'm streaming from a giant fucking monitor, right? So the difference is that I up the quality, but you guys obviously are only seeing it. It's fine. If there's a problem, you guys let me know, and I'll dumb down the screen so it looks better. But I feel like this should be clear, right? I feel like this should be clear. It's in 3D for Mobsky. Nice. So as long as it's clear and you guys can see everything perfectly, if there's like some weird blurriness or something when I change screens, I understand that. It probably does that. You guys let me know if there's any problems. That we'll fix it. But yeah, if it's just like a random blurry thing when I switch screens, then I'm not too worried about it. Don't really care. Okay. Next up, in terms of macros, we're gonna take a look at the dollar here. So the DXY, we've continued the downside move, which is to be expected, right, from yesterday. We talked about the two converging levels of supply coming from here. The levels we're coming back into where we were trading back and forth in here. Again, we know that the downside move is correlated to a positive move in value, and that this move towards the positive side was actually risk on dollar, which was also positive. So sometimes it just goes both ways. It doesn't need to be we knew we weren't fully correlated anyway, but just to keep in mind that this downside move fuels value buying, right? This is buying in the equity market. We knew that this was converting into the dollar for some equities, and then the buying comes, right? So there's a little bit of indecision there, and so in relation with the volatility index, here's the spot VIX, continuing to hold the level down here, which again is our COVID risk level. The traditional level is down here in the teens, right? Traditional levels down here in the teens. We're holding the COVID elevation in terms of volatility, which is great for options. It's great for options, so I'm fine with holding up here. Again, anytime there's going to be some selling, you're going to have volatility spike, so we're of course always looking for that volatility position. Whatever its relation is going to be in terms of the derivative is what matters. So we don't care so much about the spot VIX chart. Usually it's through whatever we're trading that matters. If you look at the options and futures are of course always projecting that there's going to be higher volatility in the future. That's the whole contagion idea that we talk about. We're seeing it now, so it's not that there's no bets right now in terms of backwardation of volatility coming down later. There's still expectations of higher volatility. So we're not going to remove the volatility idea, of course, right? We're always ready to jump on an opportunity because the best case scenario is that we push prices to the upside continuously. And when prices pull back on stop days, we're capturing through another system, not just through a hedge, but through something that's comparable and actually builds with that position, which is volatility. Because the more volatility, the higher move to the upside we can make. And so, especially on options, right? And so that's when we throw this trade in there. Again, you don't sit in this position. If you're in a long-term volatility position, then you don't understand volatility because you're not going to make money. You will lose money every single day. So again, we enter this on of a speculation understanding and an understanding of when price is going to stop. Sort of like yesterday, price stopped. We knew the day before that price was going to stop, right? Today is not that day. So again, be careful with that. Do not use it as, don't use that, bring out the hedge word and use the hedge word for everything, right? Don't buy puts because I'm hedging my position. No, you're just making a losing trade. You're just making a losing trade. I mean, there's a big difference between actually having a hedge that's correlated to a position and just buying puts for no damn reason, right? And there's no reason to be doing that. There's only a few people in here that actually may need to hedge their portfolio because of their positioning. Otherwise, if you are trading a bunch of individual tickers, like let's say you're in this Twitter position, right? And you're like, well, I want to hedge this long position. Doing very well. I want to push it further. I'm willing to take a bit of a loss here for maybe, let's say, the next 2 days, take profit days. I'm going to push the position, but to push that position, I want to hedge it. And then you go and buy puts on SPY. Are you actually hedging this position, or are you just making two losing trades now? It doesn't make any sense. It needs to actually be correlated. So if, let's say, you're in SPY calls and then you buy SPY puts, okay, well, now you're hedging your position because it's correlated. Otherwise, it's not, right? So some of these charts have their own velocity. Does this look like the SPY chart to you guys? No, because it's on a different schedule. So remember, when you're doing that idea, especially when we do come into like a territory when the market's consolidating, do not just make up ideas. If you don't know, then don't do it. Keep it simple, right? If the market's going up, trade to the upside. Don't cause a situation where you think you're actually protecting yourself, and then through the losses, you're actually rationalizing what you're doing. I think we see that a lot, and I find it interesting that there are ideas in the market that when you're losing money on a trade, you're rationalizing, no, I'm actually hedging my trade. It's okay to lose on that. That's not the point of hedging. The hedging is to actually cover the losses with another winning trade. They shouldn't both be losing. It doesn't make sense. So keep that in mind, that if your position's trading to the upside, you probably don't need to hedge it. You've probably already realized enough gains here, and that's the transition idea. You don't need to hedge if you're transitioning. The trend line hits, and you take profit and then enter new contracts to the next expiration date, or now new at the monies. You don't need to hedge. You've already captured the gains from before, right? Doesn't make sense. That's the whole point of transitioning, is that you bring home the money. You don't need to hedge anymore, right? So since this is the 8th day in a row that we're trading to the upside, I think it's probably a good thing to mention, because as we continue to push prices to the upside, I think you start to get a little bit of that, like, okay, well, maybe I should be ready for the downside. Okay, well then take profit. If you're not confident, then take profit. You'll be happy. You'll have cash in the bank, right? Keep those ideas in mind as we get a little bit hot over here, right? Now, I talked about on this chart, since we broke this trend line, we're in a whole new bullish phase. I talked about that a lot. This is a whole new chart up here, right? I talked about this trend line's about 10% away. It's going to happen. It's going to happen, right? It's going to happen whether price trades up and then it consolidates. It's going to happen that we're trading within this channel now. That's where we are. We're waiting for the S&P and NASDAQ to, of course, catch up. Oh, that's not the SPY. We're, of course, waiting for these, but they're right there as well. You're right there as well. They're a little behind, but this is the same channel that we saw on the Russell with the small caps. We know they're leading a bit. You're going to need mega caps to come play the game. They're not exactly playing the game right now, right? We know that a lot of these tickers are behind. We're in earnings season, which should have helped them a bit, and they sort of saved them a bit. But again, these do not trade well with low volatility. So we're going to see. Again, big mentions again are EVs. Ford, GM are now EV on our EV list, our short list. We are adding them to the EV list. We're continuing to trade those to the upside. You don't need to overmanage those positions, of course. You let those run. I see you guys mentioning MJ is now up 18%. Those of you that take this trade, and again, this is one of the, look at this trading. I mean, it doesn't get much more straightforward in terms of breakouts. If you did not enter, and I do see how it gets blurry, guys. I see how when I change screens, you're going to be all right. This over here, again, even if you didn't enter here, let's say you fell asleep and you did not wake up on February 2nd and you woke up February 3rd, you still had multiple chances. And yesterday I said again, even if you were not in this trade and we were up like 35% on the underlying, again, contracts are up hundreds of percent already. You could have still taken that trade yesterday, and I talked about it. Again, those coveted 29 alerts yesterday. You could have taken that trade yesterday. Today, you're now up 19%. You guys are going to do the same thing. You're going to see the gap up and be like, well, I missed it. Oh, well. Okay, what about CGC? What about GRWG? What about these other tickers? Well, this is only up 4.5 pre-market. What about this one? All right, so again, there's like every single day, if you're missing something, there's something else you can do. And also, the same chart offers new opportunities anyways. You want to sort of remove what you've seen before. And the thing I talk about a lot is just sort of move your screen like this and act like this is a new chart. This is a whole new chart. Play it something new. Play it based off of what you see, right? Prices are going up. You have downside protection. It's not so much... I think it's because I've talked so much about not chasing price and capturing it that we forget that once price breaks new levels, you're no longer chasing. Once price broke this trend line, you're no longer chasing if you're buying up here. You have new support. But I think since this move already happened, you're like, well, I can't buy there now, right? Remember, you're not chasing if you're buying at new levels. It's the same strategy as buying at support, right? Same thing as applying here, right? You bought at support, great, you got this move, but guess what? Even if you didn't, you could have still bought it over here. We don't look all the way back and say, well, I missed all this move, I can't buy it now, right? So keep those ideas in mind as this is again the 8th green day in a row. There's a lot of charts you just missed, of course. You can't FOMO over all of them, but there's thousands of charts out there that you can trade, right? In terms of this today on the tech side, you need something that doesn't look like this, where you've got a bearish candle and then another bearish candle. I would like to see a bullish candle here today. Whether that's, I think what you need is just, you're going to need to put some points on. As long as you put maybe, I don't know, I would like to see 1% to be confident for tech to continue, or else I feel like tech might be closing the week, the tail end of the week might be like pulling back a little bit. I think you do need to see a nice day today to hold sort of firm on the week in terms of confidence in tech, because we do have some of these tickers that we do like quite a bit, that we expect big moves, but this is not pushing the average. This is not pushing the average. Tesla might be able to help if it does get out of this, but again, it's stuck in the supply, and we're not doing anything until it makes an obvious move, and no one else is going to do anything either. And we know that the options are dominating these charts. No one's going to go buy the options if it's not an obvious move, because it's too much capital to tie up on the mega caps, which is why they're good trades to begin with, because they offer a lot of liquidity, but it's also what holds them down and why they enter these consolidations such as this, that they get stuck in the consolidation for a long period of time, because the only reason why you want to go get in here is for liquidity reasons, but it's too much capital to tie up in one spot if it's not moving. So you get avoidance. Look at this. You have an acceleration here through options being bid, and we talked about it. There was like hundreds of thousands of options over here. They still got held. They finally got points coming near their expirations, but as soon as those contracts came off, this was it. They were done. And so again, this is dominated with options. If there's speculation coming through, we're going to get a part of it, but otherwise, again, there's one spot we're going. We're going to continue through value. Banks, REITs, travel. There's a lot of points still, right? There's a lot of points still. We take a look at the bank side. Just continuing. I don't know what the pre-market number looks like here. It's up 60 basis points. Again, you miss it. But reminder, these are straightforward positions. Airlines have continued to be extremely bullish. There's almost an opportunity every single day on these, especially on the options. We've talked about, these moves every single day. Now, this candle here was a little bearish yesterday, a little bit of an inside day, but we're not looking to close these positions out. Now, casinos, some of the fun other charts, we're sort of stuck under some levels of supply. I think MGM is the only one that continued, but there's a lot of action up here. You're going to get a big move coming through, I would imagine. So we'll see. Again, remember sort of what we're looking for the year. Tech, of course, will be the overall tier 1. Tier 2 is healthcare. I posted a lot of healthcare charts, right? Been posting a lot, getting ready for them, right? These type of charts, Anthem, the big boy health companies are going to be putting points on this year. Keep these in mind. If you want to be a little bit slower, this is a tank, right? This will not going to move too quickly. Keep these in mind. And then, of course, with that tier 2 are all of our clean, or really sort of bundled there at the top is clean energy, EVs. So David's mentioned Blink. Blink is a part of that, of course, with the EV side. Semiconductors, we're packaging with solar. So those all with clean energy are basically together. There's a lot of charts. There's a lot of charts to continue to trade. NVIDIA, talked about yesterday. Is this a bearish candle? It was a take profit day. The candle by itself is bearish, but in the overall trend, it's actually on a take profit day, a higher high, a higher low. This is actually a bid candle yesterday. It was a breakout attempt yesterday, even though it was a take profit day. We're opening up over 1% higher today, right? It's a good example of that candle that we talked about yesterday. Do you use to have a sheet that shows the chart on SPY? I just post the charts into the chat every now and then, and I show the chart every single day. You can see the chart here every single day. So I can repost it, but it's on the screen. Anyways, let's get ready for open here. I see APHA, we're now up 30%. What are you guys going to do on a 30% gap up? What are you going to do here? You're going to transition your position. You're going to take home your profit on this chart and enter new contracts if it's there, right? There's no reason not to take that home. So again, you get like maybe an idea of luck, right? That you got a gap up instead of just continued price movement. You're going to take that home. That's 30%. That's hundreds of percent. On a lot of these are hundreds of percent moves on the options, right? A lot of these are well over hundreds of percent moves. You take that home and buy new contracts. There's no reason not to take it, right? We're going to push the position, but again, realize your gains. Do not sit on that ridiculous unrealized position, right? It's too much, just too much. Let's get this going. Get your books open. Get your chart ready. I hope you guys got your charts. Let's get after it. Let's see what we do in terms of this gap here. How much what we look for on this gap idea is how bid you start. And if you're holding it, usually takes a little bit of time. If we start bid off the bat, everybody, there's a lot of demand. There's only so many things to buy out there, right? No supply up here whatsoever. All demand. Continuing the bid start on small caps. That should mean travel is going to be putting some moves on. Pre-market numbers are holding almost everything here. So again, That's it. That is your transition opportunity when this buying's coming through, right? Thank you for linking the SPY and Q charts. Yeah, those were just posted last week, so they are updated. Okay, we're holding value. Let me show you relation with tech. Tech is holding its value as well. It's important. Little bit here. Again, mega caps do need to catch up a bit. So we do. I would like to see at least 1% on all mega caps today. Otherwise, you're going to take profit towards Friday. Maybe Friday's bid if tomorrow's take profit. One thing to mention is Powell is also speaking at 2 o'clock today. Another one of those webinars. I don't really think we're expecting anything new. So it shouldn't move anything in the market. I think what you're going to talk about is inflation today. That's hopefully, in terms of those of you that want the bullish case to continue, we hear the word reinflation a lot more than inflation, right? The reinflation idea is an important concept. He knows this. He's going to speak dovish out of his mind. So we'll see what that looks like. Okay, we're holding here. Holding here, same candle. Top of the list is holding everything. Holding everything. A couple new names up there. Twitter continues. Again, what did I talk about? You got to be in position. You want to capture the games like this from open? You have to be in position. You can't just decide on that day that, oh, okay, I'll buy this. Remember, you got to be in position. That's why we talk so much about, following our rules and entering not on hype. When hype comes in, those hype tickers, it's already moved. You can't capture it if you're buying with the rest of the hypers, right? Okay. This is a pretty wide spread for the open. That would certainly signal that the transition idea that we talk about is happening in the option chains. So taking off those shorter terms, adding on longer term, getting a little bit more at the money. There's a lot of gaps that just happened today that's going to cause, of course, a wider spread because you're going to get take profit from open, but also those that want to buy up there, spreads are going to be a little bit wide. It's a pretty wide candle. It's a pretty wide candle here. On the sell side, let's see. Anything mean? Let's see. Waiting on SBS. So SBS from yesterday that we entered on, I obviously posted a chart for that last night. Again, what we usually see here on these gap days, we talk about sort of the 15-minute candle is the development candle. So one 15-minute candle, that's the 3 5-minute candles. We see that first take profit candle. That second 5-minute candle is a tightening candle. And then that third candle is usually rising up towards the high of the first. And then we look for that break of the high of the first candle if we're signaling to the upside from open. Keep these ideas in mind for take profits. Again, the way we protect ourselves is, again, through transitioning. We take our profit and we wait to enter those new long terms, right? You wait for that opening phase. If your ticker's opening bid from the start, of course, that's a completely different scenario. But if we look at the average here, you can see that development. So now here's your second 5-minute candle. This should be a tightening candle if we're going further to the upside today from open. See that candle's tighter right there? That's sellers being bought out. There's not much supply up here, right? And then your third candle here should be towards the upside. That's if you're going to the upside after open, right? Doesn't need to. Can do whatever the hell it wants. We'll react either way. But just keep in mind for the bullish case, that's what it looks like. And then unless you get an immediate reversal candle on that second, which would mean we have even less supply than expected, which would lead to a significant amount more buyers, right? Your equation is a little one-sided if that's the case. If people are willing to continue to buy up there. Veru is also, by the way, up another 19%. Pot stocks continue. MP 7.5 looks good. Uber, Lyft are holding that level in terms of that position. I'm guessing just about everyone that was in that position had to transition today because we entered quite a bit. We entered about a week ago. All right. Got about 3.5 minutes left on this candle. We're definitely seeing the tightening come in there. So, again, we are forming that bullish look. Bring it back over to the SPY, the Qs. SPY, same thing, right? Tightening. Qs, same thing. Doji, that's signaling reversal this way. We'll see how this develops. I'm going to let's take a look at some mega caps here. Trading on the trend line here on Apple that we're looking at. Look at this spread, right? That could be good, but it could be bad. Because volatility is both ways. So you're going to need to see a little bit more come out of these. But this could certainly signal, it's going to signal a big move one way or the other based on what we see from open here. So tech is certainly ready to make a move today based on where it is and a significant move with mega caps, it seems like, based on what we see here. Keep this in mind because these will affect averages, right? It's going to affect your averages. But value is just out of the world. Take it over to FUTU continues. Again, do not be afraid of gaps. Do not be afraid of gaps. APHA is holding. That looks like it's going to continue. MJ holding. Veru, look at this. Look at that upper shadow there. That's signaling further upside. VFF continues. Twitter. Let's see exactly where this is. New trend line. Okay. Take a look at Twitter here. Keep in mind how we talk about transitions and also where this chart is now. You're on top of your channel. You have significant upside until the next inbound trend from back in the summer. You have a lot of room up here. Whether it's going to trade on this trend line or not, that's a big bullish move that's possible if it's going to close up here. So keep that in mind. If you've already missed this trade, you have more to gain there, right? Pot stocks, obviously. ENPH through that new level, right? This is, again, obviously a very bullish chart that we've talked about a lot. Lift, that candle continues. Open, again, don't be afraid of that gap from the open. YOLO, the other weed ETF. QFIN, rejection on the trend line here. This looks very good for the upside, though, still. It looks like a break. BDU continues. Retail stores continue. MP, again, same idea. That was a chance today. Let's see how well we did. Pretty decent open. Pretty decent fill. CCJ within the channel now. We talked about it over here. I can't remember who I was talking about with this. We have a couple people that entered this trade. You're now within the channel. We'll see how this trades from support. With support underneath you can certainly put a lot more points on. We'll see how that develops. NPA, we've been talking about. EH, of course, yesterday, one of the 29 alerts because we need more alerts here. There you go. You're continuing, right? A clear break, you enter, see you later. Bios do continue. Upwork continues. So after we took profit here, obviously realizing that, okay, this next candle we're opening, even a take profit day yesterday, you had another chance. Upwork continues. Significant points to be putting on. It's nice to have fresh contracts for that, for sure. INFN opened on support, bounced. TWOU, obviously new chart from yesterday that we talked about. Look at this move here. Look at the upside potential on this chart. See ya. 69.10 is where it converges with the supply here. That's where price wants to go, right? That's a chart that I have a $69 target on, so I'm sure there's some memers in chat that are going to buy that. OSTK continues as well. So a lot of great price action. A lot of great price action on the charts we're on. Again, here's your 5-minute candles. See how your last 5-minute candles looking to come up here towards the high? You got exactly what you look for on these charts. It's going to look a little bit more similar how it's supposed to over here. We'll see how this develops. LX ready to break all the supply. Let's load up the LX chart. Obviously a very bullish chart. Look at this opening from the 1071. A lot of supply up here. What do we talk about when there's converging supply? Price wants to move through it. Price tried 2 days ago. Price wants to move through there. Let's turn this bad boy green. This is a great chart. When you think about this move from the trend line in the filling of space between two levels, think about what happens next up through here. You have open space because all you've got are these. This is not supply. This is just a trend. That doesn't exist over here. Doesn't exist over here. There is no level beyond this. That X marks the spot. That's the treasure spot. Let's get your cash. Bonds, more money coming out of treasuries entering. Money is entering the equity market. Flows continue. Twitter continues. Open. Looks like we're going to put some points on open today. Seems like a very good chart. I do like this start here. I do like this start here, guys. For those of you that maybe not positioned as much as everybody else, and you're looking for new opportunities, again, same thing applies. Do not get caught up with things that are already moving unless there's a new opportunity there, new level breaks. There certainly are plenty, but again, I would not be afraid. Do not be afraid to enter things. Even if it's just a trade for today. There's opportunities in front of you, and have a little confidence. Have a little confidence. There's a lot of charts. So these charts over here, this is a good example. These charts over here that are only up like break even or 1%, you're going to have opportunities on these charts, right? These ones that are near, let's say, near just like 1% or so, you're going to have opportunities on these charts. Especially bios, things with some obvious volatility that will come through. Zoom is a good example of something like this type of open here. I talk about that open where you have price sort of pulls down, tightens, and then moves to the upside. That's something you have to memorize. You have to memorize the look of these candles here, these 5-minute candles. Memorize that look, and you look for that every open. Maybe that's the way you trade. Maybe that's what you're going to look for every single day. You have some charts that you're interested in buying. You've looked at the options, and all you're looking for are that exact moment of tightening in the chart. You should be able to see it. You'll be able to see it form on the candle. Usually you get a bit of a doji on the underlying. Right then and there, your eyes go over to the option chain, and if bid is coming through, you buy. You're going to have buyers below you. You should never have a downside risk when you're buying. Your entry should never, when you buy something, it should never go red from the start. It should only go green from there, and that allows you to always get out of that position. That's the big thing. Again, it's the biggest thing we talk about here. Biggest thing we talk about. You should all be at a point of break even. Again, if you're in this chat for 2 weeks, you can remove your downside by just understanding that you're buying on something that's moving to the upside as you're doing it, right? Everyone should be at least a break-even trader, and that's where you can actually start to use tools, learn strategies, get disciplined, because the only thing you're looking for is opportunity cost and what's the best potential upside move. What's the chart that I should be trading? I know how to now not lose money. Now how do I make the most money? That's what everyone should be thinking about every single day, and that's it. I've seen a big change. Used to be, how do I not lose money? Now it's, how do I make the most money at the top, right? It's like, what, should I stay in this position or should I get a new one? Those are the questions you should be asking. Not, well, how do I get this without losing all my money? Should I stay in this? I'm losing, right? You want to change those questions. And when you see the questions change, you know you're doing something right. Europe keeps being bullish, good for value. See, Shaq continues. Again, yesterday I was like, I'm not sure. Today, seems pretty clear. Seems pretty clear. We're above the trend line here. New chart up here. I do like this move. I talked about this move, this V move that you don't really consolidate. This is an overall just supply and demand, all demand, no supply, right? When you get that move with no consolidation, there's not even an attempt. It's just one way, go. Like that move. Let's see. Healthcare again. Big moves. WB continues. This chart is getting very interesting. In terms of transitioning on this chart, we don't have a level. There is no level to transition on, so this one you just push. Again, if you don't have a level, then you can't, unless there's a gap up where you can transition, you just push the position. Don't risk trying to take profit here and enter something new. Something that should have been mentioned yesterday when I talked about it, but you only transition on levels that are obvious. LX that was mentioned a little earlier, you're there, right? You're there. You're ready. You're ready. You're ready. VNet continues. VNet certainly another opportunity being presented there. I think that skills chart, based on that take profit day yesterday, is probably going to present an opportunity. JGR does mention something good. TME, we were waiting for that break, right? Everyone should be ready for that buy here. Again, here's another example of like when we talk about alerts or something, you know, this is a good example of something that doesn't need to be alerted every single second, right? You should just know that we've been talking about it for a week now, that we're waiting for this to break. Those of you that have a broker that allows you to put orders in, put your limit buy there at 27. If price is above 27, then conditionally limit buy me somewhere in there. Just let me in. Or if you're not that busy, then you can quite literally just wait, right? You can wait. Have an alert on your chart, whatever you need to do, and be ready for it, right? A lot of different ways you can handle those situations. Let's see. I'm gonna find you guys some. You can see a lot of charts continuing their trend. Healthcare again. See all these healthcares and REITs? Those charts are do not misses. I would be careful on this chart today. This candle here on KO, obviously earnings is today. Not so much an earnings fear. I just mean in terms of the trend here and then this bearish candle. If the candle's going to finish like that, you can't stay in that position. Obviously be careful on that. Candle, trends in candles override earnings. Who cares about earnings? AR continuing here. I like that move. Excuse me. Ascending triangle there. Okay. Bring it back, bring it back. Yep, I see a lot of mentions. GPS, CCL, all good mentions. Of course, GPS, those of you that did not know. 2261 is your level. Again, doesn't need to really be mentioned, but if you need to see it, there it is. You're also looking for 23 as a bit of a psychological level to be broken here as well. So keep that in mind. It's not a true supply, but a psychologically, sure. Keep those ideas in mind as you move through and towards 23, that there's going to be a level of buying and selling there that's a little different, right? Certainly on the option side with that strike price, it's going to have, as you approach an at-the-money contract, that's when the gamma is the highest. Keep these ideas in mind when you're seeing price changes on options. If you're not buying before it reaches that point, then you're not going to be buying at the right price, right? If you're not already in a 23 here, then you're not going to be getting a good price. You're way too far behind. So keep in mind that, again, if you're trading options on these charts, you need to be buying before it happens on the underlying chart. You need to be understanding that the reaction's coming and you see it when the signs are there. But again, if you're too late, you're going to be too late. That's a good example of one of those charts. Doesn't need to break all the way out. All that matters is the options. That RR chart, again, the two converging levels of supply here. Look at this chart, how it's continued. Again, I really wish this guy would give us some more alerts. This was a great alert from last week. That Friday buy is honestly a great buy. A low liquidity chart offers major upside. PDD giving chances here as well. This is certainly giving chances. I would say that's going to go. That's going to go. Keep that in mind. Okay. Going to keep it on the average. Oh, keep it on the average here. Got a lot of different ideas in the market again. A good thing to realize here is take a look at the average. Don't care. Don't care. We're trading velocity on our own charts right now, right? We're trading breakouts, continued trend moves, transitions on trends and levels. This is just solidifying the idea. That's it. All it's doing is continuing to give a bias. That's it. But we keep it in mind, right? We keep it in mind. Give me 1 second here, guys. Just one moment. Keep the alerts coming. We'll keep them looking. NVIDIA, we're doing great. Yeah. Let's talk a little bit about managing this position. Let's think about it a little bit. All right. If you guys entered on, there's a couple areas that people have entered on this chart, either entering from open on the 8th candle or on the supply break here. I would say both are probably the same management in terms of this candle. I know there's some people that entered through down here because that's where we made short-term trades. I had taken profit from this entry here when we got over here, right? If you're talking about an entry here, in terms of the next level, I don't know if we take into consideration this high or not. It's a little too, it's just the all-time, right? It's just the all-time. Now, if you clear the all-time here today, you can re-enter on an all-time high break. So those of you that are like, oh man, I really wish I got into NVIDIA, and again, I'm not going to make the joke of like, why not a week ago? Because it's not the same thing. You can enter on an all-time high break. So again, here's the all-time high. The high is 589. 589 is the point that you are watching. If 589 breaks, you can certainly add new contracts on. If you've not even in the position. Those of you in position, all I would do, I wouldn't transition. I would just add new contracts on to the position. Increase the position. That's it. Just increase it, because this is one of those transition ideas of, okay, I don't need to realize my gain. What I can do is actually, I have more confidence in this position now that it's in all-time highs. There's no supply in the all-time high, going to be more buyers. Then let me just increase my position. When it's time to take profits on those contracts I bought earlier, then I will, and I'll keep pushing the new contracts I have here, right? So it'll be that layering idea of, okay, I'm going to need to get rid of these first compared to the ones I enter here, but both can be pushed for quite some time, right? If we push to all time. So keep these ideas in mind, and also lean on the understanding of these other charts and how they're moving. So, keep in mind this sector and the way it moves. You have all of these charts coming towards all-time high, right? They're all going to make a pop together, right? We can lean on our understanding on these charts, right? This will definitely help with those of you in those charts, because again, it's hard to look at. Those charts by themselves. They're so determined on the sector. Matt mentions Neo. Obviously, we held the Neo position. It's doing very well. I talked about you're basically me trading on this trend here We can line this up completely with the wicks here. It looks good. We talked about the break yesterday. Again, this was another opportunity today. Another opportunity. You have a lot of upside potential. Again, it's important to capture these moves and be in there. JJR mentions run. We're, of course, looking for the run move as well. Obviously, this chart's been mentioned a lot. Not something that I was trading. It was very bearish. But now with this break, you have a lot of room to run. So, yeah. It looks like it's doing the pullback into the level, which is good. You're going to get a pullback. Let me do it on the 5-minute. Price moves through, pulling back. This would basically constitute as a pullback into the level. That looks like I don't even think that candle's actually red. I think that's upside. I think it's just not loading fully. That looks full upside. SPY trading down. That looks like upside. That looks like a trend down that's leading towards upside. And I think that's going to the upside. Just a little delayed, but not. If it was selling, then it would sell downwards. It wouldn't side onto that trend. Again, look at this move. That wants to continue to all-time high as well. Again, I would be watching travel closely because, again, travel is going to put those moves on when it gets long positions. It's going to pop a lot more than these other charts. It's sort of like the way that the clean energy charts just pop. Be mindful of those. Brian mentioned CCL. Like this pop through here, that's just a long position getting entered, right? Just popped right through there. Yeah, Twitter. So Twitter we already mentioned the trend line. Trend line earlier, pulling back into the trend line, looking for the bounce. Looking for that bounce. That's the best possible situation. You go through, you pull back, and then you continue, right? We look for this on all of our charts. Goes through, pulls down, continues, right? Doesn't need to, but that's what we look for the bullish side. This is where those transition ideas come in, right? You've got best of both worlds. You can either take the profit, continue the position. Everything you need to know is going to be told with that trend line. Everything you need to know, right? If it holds it, you keep going to the upside. It's a new buy opportunity. If it breaks through, that's a take profit chance. Take that money home. Let's see. Craig. All of our name charts. All of our charts with names. Chris, Craig. What's our other one? Chris, Craig. There's another one with a name. I can't remember. That we always talk about. Those have been doing well. Might be some correlation to names on charts. Open has continued. Again, I say it every day. Do not be afraid of a gap. Do not be afraid of a gap. This is over 5% now that you could have gained by buying open at the open, even though it gapped. Keep those ideas in mind. It's okay. Doesn't change anything. It actually makes it more bullish. But what about all gaps must fill? That is my religion. It doesn't matter. That's a bullshit idea. There's a technical reason why that happens, not because of some weird saying. Downtrend break. Let's take a look. We did put those trend lines in. It's coming close. Again, that sector. Think about it as a sector. We took the AMD breakout here because, again, the sector, not because the chart, the sector. We talk about this a lot. It's the sector, not itself. Especially when you think of semiconductors. That does look like it's going. We'll see if it gets rejected like yesterday, but yesterday was a take profit day. Today is a green boy day. I mean, even watching the daily here, that's some pretty fast movement. Looks like see you later, señorita. Sayonara. I see a wick directly on the trend line as I say that. Oh, there's your wick. It should go to the upside. I would imagine it wants to come up into here. I would have to imagine. 95 is the spot. 95 is the spot. Upside's coming. Let's go take a look at travel real quick. continuing the trend again. This opening candle, the spread that you got on these candles is signaling some extra volatility, which should help the bid side. The chart overall is bullish, then volatility should help them move to the upside. So when you look at some of these charts, look at the save move, right? How many times have I said this is the best airline? Okay. Transition point. Transition point here at the trend line on save. Pretty sure that most of you that are in this chart as well are entered from right over here. So this move, 22%, 21.5. You got to be, if you bought at the monies here, unless you bought out of the monies, then out of the monies push. You got to be ready to transition on that trend line. There's no screwing around. There is no screwing around at the trend line. So right where that is, I'm doing it right now. Transition time. Taking home, and guess what? This move here, there's no reason not to take that money off the table. There's no way anyone that made this trade is below 250, 250%. No way. There's absolutely no way. Even if you bought in the monies over here. So again, transition and see ya. The new resistance comes in at 37.70, and then the trend line is at 38.5 or so on the save chart. NVIDIA all-time high, there it is. So there it is. This trading in the supply right now, this is getting pretty hot in here, so I would be ready for this move as well. This is also likely a long buying chance for institutions right now for some of these charts. Considering the way the week's going, what we've seen, a lot of it's probably scheduled trading right now, right? When you see this trend in the market, scheduled periodic buying, nonstop. Up here, this is a better level to be buying at than down here, so. MP from the charts, this looks like it's ready to continue. Look at that move. I know it got mentioned a lot in chat, so I did take a look at it. I like the chart, so this isn't a meme or anything like that. There's the NVIDIA move. There's the LX move, right? It's coming. See that top trend line? See the levels? Wants to go through that supply. Again, this chart up there, that's a new trade up there. That's a new trade up there. A lot, guys, there's a lot. Those of you that have the watch list, again, watch this sort of 1% to 5% range. All these charts, think of the TAL chart from yesterday, that breakthrough. Again, a lot of these charts have a lot of room to put points on. That VTR move. Charts that have this dynamic to it, you gotta be ready. KC, right, continues. These type of charts that it's the points is the confusing part, where it's only like 4% only, right? Only. RDH shell, that 977. That should be on watch. SPG I mentioned yesterday is one of the alerts that we were already entered it, but you could have entered it yesterday on the break. Another 4.5% today. DHC looks like it's moving. I mentioned a little earlier. That continues. WB continues. Let's see. Retail and all these. That play chart. This is a lot of fun on this chart. That's coming up to that 40 level. This trend line open, or trend line bounce, was a great opportunity if anyone wasn't there. But this next chance, that 40, is certainly the next buy chance. Take a look at the prices from up here. There's nothing really above besides the all-time. If you look up here. There's no real true supply besides trends. That's a big move potential right there. PDD again. That move looks like a big move. Rad. Look at that rad breakout today. I forgot about that. Certainly a nice consolidation. Nice uptrend here. Nice consolidation. that's even doable. I mean, you most likely have plenty of buyers behind you. Keep that one in mind. We'll check that one. We'll check that later. It's up 9% right now. See how much that's up later. Twitter, it's still bouncing on the trend line, so it's still trading within the supply. Not too many words there. EH continues. Craig. See you, Craig. Okay. So again, I would look in that 1 to 5% range on those. Should we trade through supply? All right, what are we doing for Megas today? Still trading on the trend. Back and forth, more back and forth. Again, I do want to see at least 1% out of these charts. Or you're gonna be getting a bit of consolidation at the top here. Net, how are we doing on net here? Let's see. Overall, the trend continues. Trend line comes in about 97.5, 98. Hard to say exactly when the point is on this chart. Maybe we'll go off of short-term pattern ideas here, since we don't overall have a bullish. We don't really have an overall bullish chart. It's really just this short-term trend that we're on. So something like this, that short-term pattern discussion we had yesterday. You get a bearish candle here today, then you exit this position today, right? And you look to transition into tomorrow. So you would wait till tomorrow to enter new contracts. So if you get a bearish candle here, and it looks like it's going to close bearish with a bearish, short-term bearish pattern, then you take profit on the move from here to here, right? That's how you're going to treat this chart, because overall, we had a bearish move here. We don't have anything overall, it's just this trend. So keep that in mind for that chart. This Macy's chart, retail stores have been doing very well. So sector-wise, we're expecting upside. These dojis are certainly signaling a move to come. That's tightening, 2 days of tightening in a row. I mean, really, 3 days of tightening in a row. You're expecting a big move here. Whether it's to the upside or downside, well, the upside is certainly there in the market. So keep this in mind, that move could come at any point. And it's on a chart like that, it's going to be obvious. It's not moving right now at all. If it starts to move, then you know. Oh, Eric was the other one. That's the other one I was talking about. Craig, Chris, and Eric. Look at Eric. Eric continuing the move. That wick was a lot of fun there. Tesla puts, JJR says. Don't make McKee's cry. Tesla puts are certainly in order, yeah. That would have been a great put buy from resistance there, right? What a great. Okay, let's reevaluate our trend lines in here. See if we can find a good point. There's actually no good support in here. Remember. And now it's bouncing on this level here. What is that? 829. Holding 829. In terms of buying puts, again, you want to be buying puts on resistance. This is probably going to pull back in. This probably pulls back in. Then I would think about it. I wouldn't do it on the immediate move from open. I don't think you should be ever doing it from open on puts, because more times than not, you actually get baited. You actually get baited buying puts, because think about the people that are trading puts. Again, it's only like 20% of all the options are puts. They are not trading it. They're actually trying to capture a move in a very short-term sense. So they're already exiting this position here. They're already exiting that position. So we'll see. That does look pretty bearish here. I'm not going to buy puts. In terms of a trend, let's see. You know what it probably is? What if I'm just going to fool around with this chart for a moment. Where is the full trend? Would it be from right down in here? Let's do from here. Where's the most wicks? Here? You just fool around real quick. Is that the breakdown right there? That's the breakdown right there. Because this would be something a bit like this. Right? Something a bit like this. There she is. Right? Oh. Thank you, TradingView. Nice. Thank you, TradingView. Thank you so much. Okay, well, you know, if TradingView would let me just make these lines how I want. Okay, yeah, this would be, I would call this a bit of a breakdown. Here's your trend. Top triangle. Top triangle. Price could, I would do, in terms of, if I wasn't using an overall bias in the market right now, then I would say it would come down to the trend line here. And it would be like on this schedule, maybe in a week. That's how I would call that chart, based on just purely technical and not using any bias based on what we know. Now, since this is EVs, it's tied into S&P now, it's on the NASDAQ. I would say that that's very unlikely. Very unlikely, but you do have a significant amount of supply in here, right? We've got all of the supply in here that we've been trading in, so it would not be, in terms of technicals, this would certainly be a breakdown. Keep that in mind. If you guys want to short it, you can certainly short it. But I would be doing normie contracts. Do not fool around with like at the monies or something. Yeah, could certainly come down to that trend line. You don't have any horizontal support there, so very interesting. We need to keep this in mind for the overall, if that's going to happen right there. There you go. So take profit. Take profit. I hope you guys transitioned. So again, from transitions, keep any selling in mind. You see Tesla going. Tesla is a leader. Tesla is certainly a leader in terms of price action. Keep it in mind, right? Keep it in mind. We're on this big move. Take profit day wasn't a real true take profit day. Let's see if we pull into the trend line here. Let's keep it certainly in our purview in terms of understanding. We've transitioned. So if you are in longer term contracts now, right, you should be able to hold through probably a minus 1% on your underlying, something like that, right? So keep in mind how you're holding and how you're looking to push positions. And if you just transitioned today and you haven't bought those new contracts yet, well, then you're getting the best opportunity because you just took profit on great trades that now you're waiting for a new entry on that you might get a discount here. So think about that, right? Keep that in mind. And keep in mind that your ticker is tied to sectors and then to indices. So something like EVs, Tesla is overweighted in terms of the EV sector, right? It's a big part of the EV sector. So if you're in something like Ford now, then we keep that in mind, right? We keep that in mind. So, or something like even like a WKHS here. We're going to keep in mind that if Tesla's selling, that this is not going to break out further, right? It needs its sector to move it. This is not the chart itself trading, it's the sector trading it. And since it's small, it's getting pushed by the sector, right? We understand the difference of those charts. Here, we need 1% on mega caps today, I would say, right? For tech. This candle is going to be where it is unless these are going to be putting points on. Now, these are great opportunities if there's going to be something here. But again, here's this bear flag idea I talked about with Apple. This would be price coming down to here. If this is happening, it's going to happen, right? If this is a breakdown, it's going to come down to here. It's about 3%. You know what that is on the Qs? That's about 2%. On the S&P, maybe 1.5. Keep that in mind. Again, we just react to price. We react to price. We ride price both ways. Both ways. And then, of course, the biggest thing here, as averages change and head towards the downside, do not sleep on your charts that have significant velocity, right? Unless they're tied to sectors or indices, don't get shaken, right? And again, what do? We buy on fear. We buy on fear. If volatility starts to increase here, we have volatility positions that should gain. And again, this is how price always opens like this. So again, this is your contagion idea. Don't be like, oh wow, there's so much volatility coming. No. Brian mentioning AMC. I am a buyer here at this level on AMC. I am a buyer here on this level. If this is going, I'm in. Not because of the meme, but because there is like an actual upside potential on that chart. But only if it's going. Run. Ryan's putting the rope out. It was not able to hold with that market move. Let's see what we get up in here. Still a higher low. Higher high on the day. It's the first day. Still trending to the upside. Still a bullish move here overall. Again, we're waiting for, it's only 1017. Only 1017. These charts that have upper wicks already are certainly going to come back later if the market's not pulling back, right? So keep those in mind because you're going to be getting discount price on a lot of these charts if price starts heading back towards the upside, which again, we have not posted lower lows on any charts yet. If you don't post a lower low, then you're more likely than not heading back. But again, showing the power of transitioning for sure. Sort of the best of both worlds. These charts in this range now that I was just talking about, that 1 to 5 range, these now are sort of these are going to be the bread and butter of today for new entries for sure. So anybody that has new cash on hand now due to take profits from transitions, again, I'd be really honing in on some of these charts that have a lot of upside potential that haven't moved too much. Let me see. Those look good. That looks good. I'm a buyer. I am a buyer. Where's that trend line? Is it in? It's a little wide. Looks like CrowdStrike attempted a move today. We do it with squaring and PayPal here. That's some nice tightening there. PayPal just continues. Just continues. Monsters. Monsters. All right, coming down to the trend line. Coming down to the trend line. Great buy opportunity down here for a bounce. If we get a bounce here, tech, yeah, so again, tech not showing us a 1% day today, showing us take profit. I would say that some of those are definitely short opportunities because those are getting volatility, but also remember as volatility increases, now all of a sudden they become good buy opportunities. So don't be game theoried. And I wouldn't, again, this is a small, okay, We need to do this right now because you guys are going to start memeing and shit. This move from here to here is 7%. You know what this candle is so far? 23 basis points. It's not even up 0.5% yet. Relative reversals. Do you know where the relative reversal point is? About 3.5% loss. That would be even lower than this level here. It would need to be this trend line here. So keep in mind. Now you do have converging levels of supply. It probably wants to move down into here. But keep in mind that the bias does not overall change. We are not on the tech side. We are in value. So in terms of the relationship, obviously you get affected on the average. But this is over here, not even close. Not even close. We keep it in mind. We transition for a reason, to protect the downside as much as provide new upside. But keep it in mind. This is a good example of one candle not over meaning much in terms of the overall. Just look at this chart. Do you really give a shit up here of the average? No. So do not be frazzled, chat. No frazzling in chat. Buy opportunity. If it bounces here. You want to see some tightening. Whipsaw opportunity. Classic whipsaw opportunity as well. So we're watching. But again, your transition and take profit ideas, do not leave money on the table. And when the buy button comes through and it's there in front of you, don't be afraid to touch it. This next level down here for the trend line for Russell is 222. No frazzling. Don, I'm frazzled. Look at these positions up here, right? Holding, pot stocks holding, lift holding, QFIN. Watching this one. Again, that's a transition trade anyway. So in terms of new contracts being picked up, if it's down here, great. DHC really was making a move in there. It's a pretty interesting looking chart. Again, remember, everything is relative to the current trend. Relative to the current trend. Right now, even on the tech side, think about its relationship with the trend that it's in. You have a trend line here. This would be still a bullish bounce. That'd be a great buy opportunity. So far, 35 basis points. Now, this is an outside day so far. So this is what I talked about when you want a 1% day on mega caps. It's going to be a little tough to get up there now. A little tough to get up there. Again, good volatility opportunity here for those of you continuing to wonder. This is what we talk about in terms of volatility, in terms of it's peeking its head out, in terms of understanding. You get tightening down here. You know you're going to at least bounce back and forth. This is a volatility chance here. Absolutely. Europe still looks good. I would say value should definitely do the best through this sort of move, even though it's done the most. So it can lose the most because it's put the most points on. 1% on the SPY would be 2% on the Russell, right? Brian mentions Chewy with an OMG. What is this level in here? Oh, it's just the zone. 106 zone. Another new chance here, and a lot of this again comes back to it's not as great of a trade out here, but if you're going to fill this back up and head towards the upside in today, right? With today, this is where you look for that whipsaw opportunity that you're about to get a great buy opportunity, right? So again, this is one of those things that you just sort of, you look at it and then you miss it, right? You miss it. So, I mean, buy on fear. But see, this is the problem with when I say buy on fear, then you go into like, well, I'm the one scared. How am I buying on someone else's fear if I'm the one scared? Well, it's not being so damn scared. This is why we transition, though, so that in any sort of event, we actually get a situation where you take profit at the perma-bear's top, and then through the perma-bear idea of pushing down, we actually then get a better buy on our new contract. So this is where if you're taking profit, let's just act like we were still in February monthlies, or if you're taking profit on February monthlies and now you're buying March monthlies, think about the relationship there of how much you actually just gained from also just this spread alone. There's a lot of things to remember here and why I've been talking about transitioning so much, because again, especially when you're an all-time high, the options are moving. You're not even losing value on options on half this shit, because again, it's so relative to the actual trend that there's almost, I mean, look at these charts over here, guys. This list over here, it's, yeah. Oh well, what can you do? All we can do is I can be on this call and keep the temperate mindset. Let's see. Let's open up the SPY. See, so far, 22 basis point move. Whipsaw. What do you need to clear? You don't really have any supply, so there's not really anything it needs to break for a potential whipsaw in here. Let's take a look at Tesla. Whipsaws. In terms of the further downside move, I think it's a little bit more rotation based on what we can see. Something like, if you look over here, this type of reaction is, again, a market reaction, but the chart's not trading on a market sense. Chart's trading on its own velocity. So when you get a downside correlated move from the market, it's going to whipsaw on its own velocity. Some of these other charts. So there's some ideas here in terms of how you buy on some of these. Something like Z. Here's a good example. Z trades on its own timeline. Doesn't actually consolidate with the market, consolidates when it wants, trades on its own trend. Something like this here, this is a good example. If you probably go look at the options, you're not going to see the same relationship in terms of the market. Something like this is certainly responding, but the move is in relation with itself. If you lose demand overall, then of course you lose demand, but the supply doesn't change. So there's some things, looking through some of these numbers here, all of these like -1, again, that was like the 1% to 5% range, that now they're a little bit -1, break even. These are great charts to be looking at, I would say. I think there's a lot of opportunities through. There's a lot of charts at the break even point right now, actually. We'll see. Let's keep it on the average. Keep it on the average so we can keep reacting. Let me put it back on the 5 minutes so we can see a bit quicker. All right, over here. Whoops. I don't know why it's doing that, actually. Reaction on the trend line. So now what we're looking for in terms of a whipsaw is that you want to see your next candle right through, or over here, you need to see a higher low. If there's a lower low, then okay. Then you're going to go further, and it would be in relation with this move, so it would probably continue that move. Whipsaw is a higher high, which is the trend line here. If you break this resistance here, that trend line, then you're going to hold that trend line probably through lunch. Not until close will you get a new reaction. That's something to keep in mind as well in terms of adding on new positions. You're probably going to be a little bit more patient. A little bit more patient there. And then again, the other opportunity is the lower low. In terms of a lower low on this chart, you're sort of flirting with the idea of down here in the 222.5, I would say. But you do have, I mean, there are some other ideas, most likely, in terms of a trend in here, that it could just decide to stop wherever. Like it just stopped right here, right? 226, it stopped. Psychological levels might be possible here as well. So you're going to have to be a little bit more patient. A little bit more patient if it breaks a lower low, because it's not exactly clear. Not clear whatsoever. Besides the levels that we do have, right? And again, I would not screw around with some of your positions, right? Those unrealized positions, again, if you didn't already transition, you should never be losing money if it's not continued upside potential. And this would be how short-term are your contracts. Even March monthlies those are short-term. Those are short-term. Zoom in a little bit more here. Let's take a look. See some treasuries gaining. We get some of the inflation numbers. Inflation still is not increasing. So we need Powell to say reinflation a few times today. Those inflation numbers came out at 10. They didn't we had no increase whatsoever. Looks like some of that reaction was on the inflation number. Oh, it was. Yeah, it was. So we had the inflation numbers again. What we're trying to get right now, remember the whole Powell thing going over 2% inflation? And I talked so much about good luck, because the idea of trying to actually cause inflation it's pretty damn difficult, right? It's pretty damn difficult. All right. Important candle coming in here of whether you're going to have a higher low. Get about a minute 30 left on this. I'm going to use that. I'm going to take these candles right here pretty seriously in terms of understanding. You tighten here, continue the upside. Whipsaw potential's extremely high, being that it's not lunch yet. And melt up opportunity. SPY basically holding one level down there. Qs have that 330, so I'm in. Because that chart doesn't really care. Relationship over here, and that looks good. Still looking for higher lows here. Now again, this chart sort of led. Tesla did lead a little bit on this move. Let's see what this candle is looking like over here. Looks like higher lows. Selling is usually shows itself. Sort of like this move shows itself. Still watching this is the most important chart, right? We'll keep this chart up. Show at the top of the list. Twitter holding value. Lyft, Uber still look good. PDD still looks good. Chinese tickers are going to look a little bit better when you get some volatility in this market, of course. These candles do look good down here. Now, the lower high, it's not the greatest, but it's tightening. And now the move, again, price breaks out, consolidates, breaks out, or it breaks down, consolidates, breaks down. The move is going to come, right? The move is coming here. As you get tighter and tighter, you can see the trend line being formed here, right? It's getting tighter and tighter. It's going to make a decision, right? And you're going to see it, and it's going to be obvious. There's not going to be some little, 5 basis point move followed by another 5 basis point move. It's going to make a big move, just like these candles. You'll see it. Watching some of these tickers on the side. Volatility is not really going, so just want to mention volatility is not really moving, especially the derivatives. So there's a little bit of an expectation that market's about to go bid. In relation, there should be like a significant amount more. There should be a significant amount more volatility if market was going to break down, because think about where we are. You should be losing a relative amount comparatively, which would be like 2% on this chart. Yeah, I'm not seeing volatility go, guys, whatsoever. Now, it could just be reacting, and it could just be waiting for a move. It's possible, entirely possible. But usually on a downside move, it leads. It will lead. Let me just show you guys the dollar real quick. See this? No safe haven. Nobody just went into the dollar. What do we look for? We look for the DXY to increase in times of volatility and in times of risk, which are the same thing, but in terms of safe haven, because you're worried about equities going down. And then the volatility itself. It didn't continue to break. It's the move, not the value. So the move is now going one way instead of the other. And if you take a look at the derivatives, you do need a continued move, or else it's not going to move the underlying. You're sitting in whip. You're sitting in a whip spot. And again, we've barely lost any points. We're not even down 1%. I would like to see this is going to be a little unfortunate if we do get a whipsaw here, because now this did not consolidate anything. Didn't consolidate shit. So again, you do want consolidations to happen so we have new breakout opportunities. I think overall the healthiest thing would be, since we got the selling already, that you'd get more selling here. That would really be the healthiest thing. You've already started the selling. Just get all the positions off that you don't want right now as an institution. Otherwise, if you do this dance where now you whip back up and then you do it again tomorrow, where you're going to now go sell positions tomorrow because you want price to be a little bit higher so you get a better price point, it's, again, that's just bad. That's just bad trading. I talk about this idea a lot. If you're at a fund, an institution, you know what you want to get off your book. You don't do a little bit at once and then a little bit later, because the probability is not there that you're going to get a better opportunity than in that moment. Because the longer time goes on, the less you know. You know what's happening right now. So that was it. In terms of selling, that would be it. That's all that wanted to be sold. That's how the decision making would go. Okay, we got everything off. The selling's happening. I sold everything I wanted to sell. That was it. That's what this tightening is. Got nothing else to sell. Perfect. The only thing that's being done here is that the buyer is a little bit anxious, waiting for a moment, digesting. That's it. Now, if you're an institution and you still got more to sell, you sell it right now. You do not wait. So that's where it will be obvious. If you're going to go, then you go. So, and then they're the ones that move the market. So in terms of algos that are sitting there, that there's more to be sold, they don't wait. They're not going to wait until tomorrow, right? That's just not how it's going to happen. So in terms of tech, if this is all that was supposed to get off the book in terms of tech, then that was it, because it would have sold more. You don't sell half of it, right? Think about it like a sell-off or something. If you're selling something, if you do a garage sale, do you only sell half the shit in your garage, or do you sell all of it, right? If there's stuff you want to sell, you sell everything at once. You don't do 2 garage sales. Hey guys, we're going to have half the garage sale today and half the garage sale tomorrow, okay? So come back tomorrow. No, you do it all at once. So keep it in mind. This tightening here, you're going to get the decision right now. That's your decision. So Let's see what we get. Give it to us, market. That is a lot of tightening, by the way. That's a lot of tightening. We did have a wide spread from the open. Now we're getting back into the tightening that's generally should be here. Thank you, Ecto, for that. That's great. That's good stuff. Yep, very cool. Very cool. Right, let's see. Bitcoin -5. Interesting. Institution saying nah. Where Tesla took profit. They were debating the whole time. All right. If you get a lower low or a higher high, that's the direction. Remember, that's what we got for the tightening here. Higher high, upside. Lower low, downside. These candles, this trend. Take me down, country road. Come on, give us the move. 222. All right, we bounced to 226 before. Let's see. Lower low is here. See ya. Nope. 226. 226. There you go. See ya. I'd say another 1%. A oneer. The other thing you get, let me just draw it now, because you know it's going to come, it's going to look like this later, is this, right? Keep this form idea in mind. Because that leans into the consolidation, that if you don't get the clear break, that you get into this sort of trend, and you move this way, and it actually turns into that lagging sort of whip. That whip this way. So that's sideways where you're going to cock your head to the right now and look at this way as your resistance. But I would still say like 1%. 1%. Now, in terms of tech, things get really interesting over here. You've got two converging levels of supply. 330. Let's see how quickly it breaks through there. That would be my short spot. I would be shorting there. You can short down to at least this level. Let's see what we get here. Let's see what we can get. Holding the 329 and a half, let's say. A lot of the most bullish positions, again, holding. What do we got? Dollar break to break even. SPY does have this trend line here. And you've only lost 67 basis points. So that doesn't feel sell still. I'm having a hard time seeing the sell side here. You can see, look at that bounce on that trend line there. Again, no wicks to touch, but again, you can see that move. That is doing a little bit of the consolidation that I just spoke about. I'm having a hard time seeing the full sell picture so far. I can't really short if I don't have clarity to the downside. So again, we're going to stick with the transition. We transitioned positions, and now we're looking for the new long terms. I would love this trend line down here. I'm having a hard time seeing it, though. Having a hard time. looks like you got... You do have, again, there's so many trend lines on this chart. You've got a little bit of this trend line here, that bounce. You've got a ton of wicks through here. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yikes. Okay. There's quite a bit of wicks over here. Yeah, you can't see it on the 5-minute, the 15, but again, I would say bias has not changed whatsoever. Keep that in mind. I don't even know if we're going to get much of a discount on new contracts. Let's start to look through some option chains. Let's see. Keep this up. Put that there for you guys. Let's see. Let's see what we can find here. It's going to be lunge. Lunge, what are we expecting? We already got the pullback. You're expecting a bit more of a melt-up lunge. You'd be expecting a little bit more of a melt-up lunge. Okay, we're trading on these trend lines here. So if this consolidates into the trend line, you're going to melt on... Let's see. We're certainly trading on that trend line. Funny how that works, huh? What do we want for a melt-up? What is the best thing for melt-up buys? EVs like volatility. But volatility is going to drop. So we want to buy on fear, but volatility is going to drop. This is not holding volatility. It would have sold more. This will be an important spot again. See, even those moves, see how controlled something like this is? This is not a selling. This is not selling. It's market demand being limited. It's a removal of demand, not selling. So it's not more supply. It's not more sellers. It's less demand. So when you see a chart like this, charts like this are good opportunities. You find a chart that looks like this, that had a higher high, that sold through market selling on a trend like this, those are great opportunities to look for later. So keep those in mind as you look through charts for potential opportunities. I mean, a lot of these charts are just bullish. Some of these travel charts, something like this, the intermediary travel that isn't exactly full on like airline or something like Expedia here. These type of charts that continue to do very well, don't sleep on charts that are bullish, right? The chart's still bullish, it's bullish. That candle there on LX, something like that, you already had the wick today. You already had the bid potential earlier. It had a reaction to the market. If you get a support bounce here, then that's a great entry, whether something's happening in the market or not, right? So keep this idea in mind if that bounces. Uber, I mean, it hasn't even lost points. I don't even think we can look at that. That's just continuing. Some of these turns look very good. Some of these REITs look absolutely they're just such a bullish move. Not even a reaction to the market besides demand being removed. So again, in terms of understanding and what we understand, I think there are chances. Of course, we're just reacting. We're setting up plans. Bios, you know what? Bios are probably a very good opportunity because they're so volatile that any market move, they lose a lot of points, right? They lose a lot of points and they're the quickest to whipsaw back. So think about think about some of those charts as well that we've been transitioning on. A lot of those got transitioned yesterday, and we've talked about you're actually trading within the sector itself. You go from one bio to another. Keep in mind that volatility, those charts offer significant upside potential based off of any pullback. So we're going to keep those in mind. This is the spot we're looking for down here. This is about 224.5 if it comes down into here, if it trades on this trend line. So that converging spot, it's going to be important unless it's just trading on this trend line. It's going to bounce this way anyway. Let's see. Baba. Another Baba chance. That did move with the tech. That certainly is correlated with tech a little bit more. That chart looks silly. CCL. QFIN, that transition, right? You're looking for that transition point. You probably want to wait for the trend line on a chart like this. Look at your chances here, right? You transition at the top trend line. Imagine, right? You get your take profit, and then you get a new buy with even better contracts on here that present better upside. This type of move is why we use the strategy that we use. We are minimizing downside while maximizing upside no matter what happens. No matter what happens. That would be, this would be a great example of what we talk about. This would be a great example here if you get this bounce and you get to trade all the way back to the upside. Be a great example. It doesn't need to happen, but again, you're planning for it. Just like plan here. Plan. All right, let's take a look at semis. Let's keep this in mind. Okay, NVIDIA move. This candle, let's take a look. Reaction to the market, holding the level. Looks very good. Looks very good. Did not post a lower low from yesterday. That's an important part. Now, AMD has been the most bearish. Market certainly did not do it any favors. You still got to wait for the trend line on that chart, for sure. You got to wait for the trend line there if you haven't bought. And again, we have still not made a relative move. So, have not made a relative move. So, again, your bias should not change. And hopefully that was made clear by what I said. This is a 50 basis. This is a 0.5% move already from the value chart. So, that's a pretty violent move right there. We're coming back into that tightening range. We really liked this sort of 226, 226.5 area on the Russell chart. Let's see what happens around in here, because this would be a spot where if you break through that, then you're going to put another big point sort of move on, and then the trend line comes in, and then that's all buyers once again. So keep in mind this delayed whipsaw idea that I talked about with these trend lines in here, what this sort of signals. But you got to get through that tightening spot that we created earlier. We put a lot of support, a lot of supply in there. That tightening spot, remember, right? Brian mentions Tesla. Again, EVs. EVs do great on volatility. Tesla being the volatility king. Keep that in mind. Now, keep also in mind this move of coming into the trend, or if it was higher, right, up to this resistance here, right? One of those two, you got to see clear. You need clarity, so do not get excited over here whatsoever, I would say. You need to see clarity there. Coming into this level, you could just come back down and reject it. We see this a lot. So you need a clear move. If this is first of all, it needs to be a clear whipsaw. This type of thing where you bounce here, if you come back into the level and get rejected, that's even worse because you're confirming a level in here now that you just created. So you do need to see a clear move. So keep that in mind. I mean, you're getting it over here, obviously, but Just in terms of how we watch and look at charts and react, right? Because we don't go, oh, okay, well, now we're like, everything's great. You can buy on this type of move. But in terms of when you're thinking about, you're processing how you're managing a position and how quickly you might need to exit, especially with options being a bit more sensitive, you don't get excited on anything in terms of managing it and feel like you're in the clear until you actually see the other side of that whip actually happen, right? Otherwise, you're actually just confirming the downside move, just like we confirm an upside move, right? To confirm an upside move, you go through the trend, you come back down, and then you go. Whoops, right? This could be the opposite. You come down, confirm the downside move, right? Which one's worse? Keep it in mind. Keep it in mind. That GoPro $8 buy is still looking good. We're pumping volatility into those contracts. Go take a look at the GoPro. Go take a look at the GoPro chain, right? This is pumping volatility into the $8 buy that we thankfully have some great memers in chat that decided that based on what I said about wanting to buy GoPro, and I completely remove my rules because I type into the chat. So of course I no longer follow my rules of buying support and selling resistance. I just buy in the middle of nowhere on a sell. No, we wait till $8 and buy on the support. But thanks to some people in chat, they gave us good price points to buy down here. This volatility, though, is going to make those contracts go insane. Insane. So, again, if you did buy down here, congrats, because you're about to get IV'd out of your mind. This is like waking up from a hangover and someone just brings an IV bag, hooks you up, says, have a good one. That'd be great. That's gonna be getting interesting. All right, you got to see it. You do need to see the whip. You need to see the whip. And again, tech, we need 1% today. So I don't care that it came down 1% already. You need 1% on the day, or else this is going to happen again tomorrow. So I need to see 1% gain on mega caps today, or else I expect the average to be down tomorrow. That's just based on the technicals that we see. You do need the trend to continue. If you're not continuing the trend, then you're breaking down the trend. That's the reality. If you're not holding support, then it's resistance, right? Bounce on support, you need 1% on the day here. I want to see 1% there. And again, if you come down 1% and then it moves 1% gain, that's 2%. Quick math. That sounds like a good gain to me. So you should be taking those opportunities when they come. We buy on fear and red days. If I see anyone in chat today that gives me another, I really wish this guy would give me some goddamn alerts and keep me on the right side of the market for once. I am sick of losing money. If only this guy would help me. Imagine being a seller down here instead of here, or being a buyer here and not here. Too much, guys. No dumb DMs today. All dumb DMs today will be posted in the trading floor chat. Hey man, I sold at 400 and then price went up, and then I bought at 500 and then price went down. And I don't know what I did wrong. We're still not getting through the tightening here, which again, I need to see like an explosion through that tightening. This is coming up to the trend line. We'll get our decision made there. I do see EVs moving continuously. Bios look good. REITs continue to look good. Value itself is just doing very well. I mean, value is just such a leader. It's pretty insane. It's pretty insane. This move here, like this kind of, this chart. I mean, let's just be honest. We transitioned here. This kind of move, and at me, right? I said transition on the trend line, right? look at this trade here. Think about it through without even thinking that the market's coming down. Think about this trade a little bit. Transitioned here, so we took profit. Price then immediately came down, and now you have a new opportunity for the transition to buy at 2% lower. This is why we do this, right? And so I'm really hoping you guys are getting it now. It doesn't mean that you're transitioning because you're expecting a move to the downside and you're going to get a better price point and then you didn't lose any profit. No, you do it for you're getting a double whammy on it. It's one, you're selling at a potential rejection, which happened here, and two, you're doing it because you're going to get a better exponential anyway by taking profit. And so you get to take home the profit while getting then better profits on the next leg. So again, this is, you got to be doing it because otherwise you're not profiting. You're just breaking even all the time. You're just breaking even too much. You got to have that. You have to be gaining alpha, or else, again, you're just trading the average, which the average has been pretty good. Average has been pretty good. You're certainly not getting hurt, but I think you definitely need to be taking advantage. Just like from last year, right? If you traded the average last year, you did pretty good. I mean, market was up quite a bit, depending on if you got blown up in February and March, but even then, market was still doubled. You could have done better, though, as seen. That CCJ trend line up here, right here, that position's very interesting. MP, these charts from yesterday, I'm going to bring up the charts from yesterday. Take a run through some of these charts. Here, you never opened above this level. You're not going to buy into resistance here. Dish. Support buy opportunities. I would not be buying on that 31.5 because the trend line, you have an opportunity here at that 32.11 that I have here. If the price comes back above, that's a buy opportunity on 32.11. Run. Same thing applies, and also with its sector, you want to be breaking that 78.62 there. Open. And let's just be honest. It doesn't get much more clear than this support bounce. It doesn't get much more clear than this support bounce. If you bought from open here, then you have multiple things to think about in terms of the way you trade. You bought it open here and price starts to swing down, you should be getting stopped at the break even, or if your contracts have enough volatility, they never lost value from that open, not just the ticker name, but from the open. This is a bounce. Again, I just talked about it for like 30 minutes to buy on fear. So anyway, MP, same thing applies. These didn't actually lose value, but if you didn't already enter the position, you could have bought there at the 36 level. JWS, very similar situation here with you've got resistance here. You can be buying here, but you need to understand what it is exactly you're doing. You can trade between here, and there's plenty of percent to trade through here, but you need to see movement that's relative to the rest of the chart in the trend that it's on, which is very hard coming from a rally here. All this looked like was price just selling from the open. So that was never going to be an opportunity there. Defend was just immediately rejected from resistance anyway. You're waiting for that 1868 level to break. SBS, you have a trend line opportunity to buy here. That was an opportunity at open. I actually had already bought from yesterday, right? So I had to take profit. So think about this situation. If you took this trade yesterday, you took profit from the $8 when it broke back down. I'm going to go over this because it's a good example, and then I'll mention. So we bought it open on this break. When it price broke back down, again, you sell on if support gets broken. It didn't hold support, you sell. Over here, look at your opportunities, trend line buys, or a 760 buy down here if it breaks down. Multiple chances there. Last chart is Anthem. This is a tank. It's not going to move no matter what's going on. It's just going to go one way, whichever way it's going. Trend line, that's it. This is a long position you put on. You don't screw around with short-term contracts, think you're going to fool anybody. No, this is longer term. It's going to take a minute. It's going to take a while. Fib says, hey man, Europe, thoughts? Do you mean Europe as in European tickers like London, Germany? Or do you mean like something about EURN, Euronav? In terms of Europe, I see the FTSE's at break even and the DAX is minus 75 basis points. I don't really see much going on there at all. They just react to us. Yeah, they're just break even, reacting to us. I'd imagine that this goes positive on the day. They close in 30 minutes. I would imagine FTSE closes break even, green. DAX doesn't need to move because it's a tank. It doesn't really do much of anything. London is a lot more aggro, and based on the dollar right now, they're likely going to be aggro and buying. So you can, I mean, it's already moving. And in terms of individual tickers, again, it's the usuals. Lloyd's Bank is the most heavily traded. Nothing really changes there. Beefy gets traded the most. Again, oil has been doing significantly well. We got up to 60s, back down to 58, but in terms of oil, it's been doing well. So London's been doing completely fine. And again, what we talk about is they're a bit more value oriented. We think of Asia as being tech, and then Europe specifically towards London, but also DAX is fine. They're value oriented, and that we usually use those as relations in terms of our understanding. Volatility here, I talked about it. Volatility was going to get topped out. You didn't see it continue. We're going to keep this in mind because, again, that's why we buy when the VIX is high and sell when it's low. We bought up here because that was the best opportunity to buy. This still has not broken through. This looks like melt up and swinging back and forth during lunch, which means in terms of transitions, in terms of overall transitions, if you took profit today or if it was before and you're waiting for new cash to enter, it looks like you're waiting for close or a clear break right now before lunch for a melt up lunch. You want to be buying before a melt up lunch because your contracts are going to trade past today. They're deciding right now if they're moving or not. People are deciding right now, speculating where price is going to be Friday. You don't want to be waiting until after they made a decision because guess what? Your price point's going to be screwed. You're not going to gain any points from melt up lunch. So you might as well wait for close if you're not going to be able to pull the trigger, right? If you're not able to pull the trigger down here, then there's no reason to pull the trigger here. If there's a clear break, I would hope you're buying. But if you didn't buy here, then you're not buying during a melt up lunch. Keep that in mind. Keep into consideration who you are as a buyer. If you can't buy on the fear, then you're not going to buy during a melt up because you're never going to get a good price point and you're going to lose money through all of lunch, and then you're sitting on contracts that are not gaining, and then at close if you sell them it doesn't even make any sense. So keep in mind sort of these things, and you know how you pull the trigger. You know how you trade, and if you're able to buy multiple things or not, and how you manage those, and if you can't handle having to break even and get stopped out and then buy it again. If you're not able to buy something, get stopped out 10 minutes later, and then buy it again 10 minutes after that, right? You guys have all been there where you sell something and then you're never able to re-enter the position because you just sold it 30 minutes ago. You're like, well, I just sold it. I can't buy it again. I'm going to get stopped out again. I don't want that. If you're that person, right? So you shouldn't be trading on this idea. You should wait for more clarity when we have situations like this. This is the take profit day. If you can't handle taking profit on that move up here and then buying here, then wait for this trend to happen again. It's going to happen. It's going to happen, right? But keep it in mind. This is... most people here I know enjoy this. This is what you want. This is what you want because your contracts are getting value right now. You're getting that volatility. You're buying on fear. There's no better feeling. And there's nothing better for your bank account and for your mom for Valentine's Day. The amount of flowers you're going to buy her than buying up here on this fear, right? Selling the week before the market goes down and then buying at the bottom of it, right? And then everyone goes, no, that's not possible. You guys know it's possible. These positions continue. Let's run through the top of the list real quick here. I think this is important. We're still waiting on Makizis to give us thoughts on OCGN. I don't know if he saw the short-term pattern I put on there from yesterday. We're waiting on his decision. Hopefully he does not blow up the Unrefusables fund. DHC, I've talked about multiple times already. Look at this move. Penny stock land. You penny lovers. Talked about it from open here. That's a fun penny one. LX, I talked about it down here at 1071. How many alerts are today? There's going to be 69 alerts today. So keep count. LX down there, told you. SKT, holy moly, I forgot about this one. Whoops. REITs have been doing extremely well. REITs have been doing extremely well, like I've been saying. Look at this move here today. Look at that move today. Completely forgot about putting this on. Whoops. Whoops. Usually I have limit buys, but I was specifically waiting for this one because you don't really know what the timing is. And so you don't want to just get filled on every single one of these days. Whoops. That's a great trade. Again, these REITs are marginal trades. For every 1% underlying move, you're getting like 10% on the option. And every single move above 1%, it continues to get more and more of an exponential. So again, like 5% is, you're getting close to 100. You're getting close to 100% move on even at the monies here. So that's why buying something like this is important on the break. It's obvious. Look at this chart. I don't know how I missed it, but look at the difference between this move and anything in here. It should stand out. When it's obvious, it's obvious. That means it's time to do something, right? The play chart I talked about, we're waiting for that 40. ENPH, opportunity, Bed Bath & Beyond, the absolute meme economy winner. This is similar to AMC over here. This trade is very similar to the AMC. There's a lot of potential on these type of tickers that's not sort of GME related. Meme economy, but not GME fucked out of its mind. These charts are very good. You have a lot of upside here. I mean, that's easy. 32% easy. Easy right there. That's easy. Keep this in mind. If that comes up here to 38, don't be surprised. Yeah, AMC is the same thing. Again, I'm a buyer at that level. It's the same thing here. Do not sleep on, even though there's a little bit of a meme, don't sleep on this move. That's 58% right there. Don't tell me you don't like 1,000% gain. Don't tell me. I don't want to hear none of that. Same thing here. That's like 1,000%. It's dumb to say, but I mean, it feels weird to say, but you know, you go look at those contracts later and you're like, wow, okay. My spy button was not working. There we go. Yeah, I mean, okay. We're getting there. We're getting there. Okay, we had some more to go through. SPG, again, REITs. We entered the SPG trade already. SPG continues. BZUN, we transitioned. Look at this move now. Think about the difference here. You transition. You've got on the open yesterday, you bought in. Now you've got this move here today. Again, trend line up here comes in at about 57. That's a great trade. That's a new opportunity up there as well. Let's see. Let's keep it going. RR, again, talked about this move through here. That continues to do well. YY continues. MP, we just talked about that bounce on 36. It's already continuing to go. APLE is the other REIT, similar to Apple. Same name. Lyft, Uber, no reason to take those off yet. CSPR, see that mentioned in chat every now and then. The old Casper mattress. See ya. Get the free pillow with that one. Save, again, I mean, I don't think I need to mention this chart again, but that's continuing. Looks good, guys. Looks good. I see a lot of good stuff. ETR looks good. EDU sitting on that trend line. Same thing applies here. You know what to do. You know what to do when you're in a channel. You know what to do. Waiting for that peak chart. Waiting for the 2 chart. PPD. QFIN, we're getting the bounce here, and I just talked about it. If we get the move here where this fills all the way to the top, then this is going to be, I'm going to use this as an example. Probably make a quick clip about it because, again, this idea here, if you capitalize on this, this is called, I talk about trying to be perfect, right? We talk about trying to be perfect. You're never going to be perfect, but every now and then you will be. If you follow rules and you execute properly, This is called being perfect. If that makes a move and you're able to execute it the way it's supposed to be executed. Maxing out your gains, minimizing downside completely. Never having any risk on a chart like this is what people trade for, right? That's what you trade for. You get that and it just feels right. Feels good. REITs. Again, REITs, value. I don't think I need to say value 100 more times, but I probably will. GPS, be ready. Be ready. Let's take a look. Contracts are going to get expensive here. They're going to start to get expensive with that volatility. Remember what happens when that IV starts to creep. That speculation comes through. Gamut out of your mind. Underlying gets bought. See you later. Go to Gap. Get one of those little Gap shirts that says Gap on it. IMAX. Interesting if you can get this trend line breakthrough here. I'm not sure if I'm a buyer there. You need to clear like 19. REITs, again, Expedia I mentioned. That sort of intermediary travel. Keep those in mind. Yandex, again, intermediary tech. We talk a lot about this sort of the tech side. It's sort of like the not semiconductor space, but the other space of tech where we talk about things like Roku, right? Those trend-setting charts, and then the charts like this that are intermediaries, the internet service providers, these different companies. Look at this break that's happening here. If you break that level and you go, take a look through here, you got nothing. See ya. Something like this is important to think about. Those charts that are not specifically mega cap tech oriented. I don't know what that is. But I think I want to be a part of it. Whatever that is. That is... How did we miss this move? How did we miss this one? Who was in charge of CDK? Who in chat was in charge of this? Where's the alert from that? Is this who? Hold on. CDK, no results. No results. Nobody. Okay, guys. Somebody had... I obviously completely missed this one. That looks like something like really got messed up in here. I mean, something got really, truly messed up there. Where are the boys? Where are the boys? Who's in charge of when? Last mention was on the 8th. Okay, it's probably because I mentioned win like 100 times in the last 2 days, so I'm in charge. We already mentioned it earlier anyway. We do have it on video and recording. That break there, and most people are already in this trade, so we haven't lost any value from anywhere in here. If you bought even up here, you have not lost value on your contracts. It's going to keep trading back and forth until the move actually happens, market related, but we know this is actually a little bit behind, so a little bit behind. Oh boy, we got more cats in the chat. Great. Nice, guys. That's cute. I like that one, Mobsky. Looks nice. H&R Block. Who would have thought during tax season that we'd get some demand on the the HRB chart? I can't believe I haven't posted this in a while, but we get this great move from over here. That trend line. We can probably just copy the trend line over. That trend line's here. Looks like it's about the same over here. Can we get some resistance in here? Possible resistance comes in like 21. Possible resistance at 21 or so, but yeah, this does continue on this sort of angle. It's always funny that during tax season this gets so much demand. It's such a meme-y sort of thing to think about. the fundamental side of things that people are like, oh yeah, it's tax season. I better go buy the tax charts. I mean, doesn't make any sense, but okay. Anyways, we'll see how that continues. There's nothing to really do on that chart. Oh, wow, Discovery. We do have that trend line coming up again. 45.75. Keep that in mind. Those of you that are in this long position, like, this is like significant long position. We, of course, have multiple charts on this, right? We have multiple charts of the discovery. Where's the other one? Oh, no. Is it this one that we have the... Where is the other chart, guys? Is it this one? I guess we're just missing the trend lines. You guys know what I'm talking about. I posted this chart so many times. I'm not sure where the other pattern is down here. But anyway, we have the other chart from down in here. We entered it again. There's a lot of different long positions you can be on this chart. In terms of transitioning, this is not a transition chart. You just have to push it. There's too much going on in there. Too many different long positions. AGIO, again, bios, I talked about that fear buy. Certainly opportunities for bios. A lot of fun on that. Oh, I've yet to watch that video with the lawyer with the cat on the thing. I gotta watch that later. That Tiger Shark or whatever posted. Looks good. Let's see. Take a look at the bank side. Do we get some buybacks during this buy? Let's see. That's look at that whip right there. This didn't move the contracts whatsoever, so we continue. We'll see what this melt up lunch looks like, but we definitely continue. We're through the trend line. In terms of a melt up, I would like to see price trade up to the highs of the day before 230. Before 230 for the bullish case. I think you need to see that for the bullish case. Otherwise, you're going to be probably trading flat tomorrow. If you trade flat tomorrow, then likely you get a bid Friday. But if you continue today and then you get a flat day on Thursday, I mean, there's a couple different things. A couple different ways that the timing could line up in terms of pushing positions into next week. Again, I think we just continue our trend here. You're going to get different take profit days. And again, the downside move is going to always be more violent than before. But it doesn't change the bias towards the upside, sort of like today, right? When that take profit comes in, it's violent because you do it all at once. You don't wait to do one day and then another day. So keep that in mind. But in terms of timeline, it does depend in terms of if you clear the high today, come close. So that will depend on melt up lunch. So keep all these ideas in mind in terms of when you're buying, how you're pushing your position, what you're willing to hold through. Just start to think about it now, right? What do I do if I'm going to get a break-even day tomorrow? I'm going to hold through that, and then on Friday, how am I going to handle if there's a take profit or bid day, depending on a big move one way or the other, right? Just start to think about it now. Think about it now. If you bought down here, you don't need to think about anything. You can go back to bed. That's the whole reason we buy on fear. You get to go back to bed. So during lunch, take a nice nap, right? Because you bought at the low. You bought on fear. Everyone else that bought over here is going to have a hard time taking a nap. Everyone that bought here is going to be having a restless sleep for 30 minutes. You're going to be sweating because you're just not sure. You're just not completely sure. Clarity is like, we'll see. But we're looking good. I like the price action so far. I do like when we get that. I wouldn't mind another swing down. Hit us with everything today. I mean, I would like higher volatility. I talk about this a lot. I would like a little bit more volatility than we got, but that's okay. Everyone shorting volatility all the time pushes it down. There's not much you can do. We'll continue to watch, continue to react, but I'm betting that the top of the list is going to have a lot more 10%ers up there again today, which again, take advantage of what you can. Price went down to break even, then it closes 10% higher. You missed it, you missed it. You weren't paying attention enough, you didn't have enough time. Somebody did, so somebody did take advantage of that trade. All right, guys, give me just one moment here. All right, all right. So we continue. Again, the AMC thing from over here, guys. I would think about this based on your take profits from earlier. Use some of that cash, right? Use some of that cash to have a little bit of fun. Not so much fun, but some of the trades that are a little bit more on the meme side. You know, things like Rad here. Like, I wouldn't sleep on some of these things. I know we're like trend trading right now, and so we sort of, when we are doing trend trading, you know, 8 big green days in a row on a nice trend, we sort of remove some of the more volatile, you know, short-term trades. Don't forget about the short-term trades that can be a part of your portfolio. Those gains where instead of getting, you know, we like the trend trades because you can get that 100% trade over 2 weeks or something, and there's not much risk. I'm willing to put a little bit of risk on, maybe quite a bit of risk on, to get 100% in one day, right? Those are the times where you're building up capital quicker. And again, those of you that are on that smaller capital trading, or you're trying to sort of minimize the amount that you're trading for higher gains, then you need to be looking for those trades all the time, right? When they come, that's where you're prepared for a lot of different things, and you want to react as quickly as possible on some of those charts, right? Where, you know, again, it's going to be some risk, but you're willing with your small sizing to be able to get in and out of that position quick enough that you're going to be protected enough, more than the next guy. Trading between the levels here on that play chart, we got up to that 40, got rejected. See what that does near close. Again, the Chinese tickers and everything like that, keep these in mind. See what Baba did. For the Baba trade, I obviously talked about the buy down here, potential. Again, we talked about the buy everywhere. This type of move, that's your opportunity, right? That's your opportunity. This was your opportunity, but, you know, whichever way you want to do it. This, of course, was the best chance, but you miss it, you take the next opportunity. I don't think the JD chart's doing well. Making the same move, but I don't like it here. You need a better high than that. It's a little too much going on. CDK did not go yet. Pot stock's holding well enough. Yeah, the Billy chart, I mean, again, like, I don't know anyone that hasn't traded this chart before. Always the chance there. Always the chance. I'm curious of how quickly this breaks. Terrible volume. What's the average volume over here? Oh, the volume's terrible on this chart. Okay, remove that chart now. It's got too low a volume over here. LX continues. MP with the doji. The MP doji. Certainly opportunities on a chart like this when you're dojied on the day. Gives you a lot of chances to make decisions. Again, the Uber and Lyft should not be removed whatsoever. This only adds to your contract price. Twitter's still holding. I think it's a little hard. It's really hard to look at this chart on the intraday. There's a lot of different ways you can look at this. Again, this is a great transition opportunity here based on the way we talk about it when you come into resistance, right? But we also talked about how up here you've got that upside chance. So you've got 2 different levels of supply. It's going to take a minute. It's going to take a minute. Either price comes back through here, right? Which is probably the highest probability. The highest probability is that price actually closes above this trend line here. If price closes down here, then you're going to be waiting like till Friday to buy in your new position, right? So keep that in mind if you've been trading this. If you took profit at the trend line, you look to enter up here. Let's say you get stopped out or something, you're down here now. Then you need to be more patient on this next move because, you know, again, if you're trading up near this trend line, you're not exactly sure what the reaction is going to be the second time, right? You're not exactly sure. It's going to be harder to get back through the trend line, that's for sure. Keep that in mind. We're flirting with this trend line once again here. So again, for melt ups, you're going to be swinging back and forth. So based on the fact that we broke this, I actually don't really care too much about this move if it comes down in here. I'm going to be using the same strategy. Chewy at support. Chewy's in supply heaven over here. There's a lot of supply over here. And again, I would be expecting, this is similar to the other chart, the Twitter chart. Your higher probability is that you're going to close above this trend line back in the channel. That's where price is likely to be. If it's out here, then guess what? It's going to take a lot more time. It's going to take a lot more time for that to develop this way if it's not within the channel here. That's just the situation, right? There's not good examples of this chart trading flat other than these consolidations. If it's not trading up, it's consolidating. That's just that's how price works right now. Tech. In terms of this move, again, we're looking for tomorrow and for the week to close higher for tech from where price is right now. Where? I don't know why I keep saying or. From where price is right now, you need to be green and probably 1%. If the price closed right here, then tomorrow would be probably another red day in here, and it would be flirting with all of this supply. And Friday may not even be very good either. You need to stay in this channel and continue to trade up, which means you need to give yourself room to bounce on this support and trade on this trend. Again, this is going to make itself known. There's not going to be any surprises here. There can be no surprises. And yeah, the Chewy chart again. If you go look at I would go open up the charts for the Chewy contracts. You're going to see everything you need to see there. I'm not talking like shit contracts. At the money, marches and further out. Go take a look at those charts on the contracts. That will tell you what you need to know. Okay, Chinese ticker's getting ready to go. Let's see how much volatility is going to come down here. Expecting this move to come, well, I guess it's not till 2:30 once you get out of lunch. Lunch is going to have continued volatility here. Unless you get a clear melt. Clear melt will, I don't know what that means, but if it's a clear melt up that you're trending, I guess I should say trend. If it's a clear trend up, then volatility will have dropped. Maybe this is more tied to the dollar. Probably more tied to the dollar here. So if the dollar is going to break down, then of course. Look at this consolidation in here, right? I mean, what does that look like? Maybe we shouldn't have it on the 5-minute. Maybe we should. There you go. It's just your typical, the typical, right? Lower highs, higher highs, lower lows, higher lows, diamond, quick sketch for you. That's all you get. You know what I'm talking about. You have tightening right now. Price is going to make a decision to go to the downside or upside. What's more likely? The downside. The downside is going to come here. You're going to get a candle through here. 2 o'clock, Powell speaks. We're going to watch the dollar during that. Or we're not going to. I will, you will, on your own. And we'll see what the dollar does in reaction. Because again, we're looking for that reinflation word. We, trading value right now, to the upside, want to hear the reinflation word. Something about inflation being reinvigorated. You know, that the government spending is going to cause inflation. These different things, we want to hear them. The market loves it. Powell, give it to us, right? Give the people the dovish tone that we deserve. Europe closed break even, didn't finish green, but that's okay. Trading on the trend line. This is a great melt. So in terms of where price is, That closes us around 228. 228 is going to be the mark of break even, which still, though, we're looking for a recovery up to the high, which, again, from what happened, is about 1% away. So you have a lot to gain here. A lot to gain here in terms of what you can achieve, right? Buying on fear, again, it's not so much just the underlying move you're going to get, it's the volatility you're going to get on the price. That's only about 64 basis points on the SPY. That lit chart continues as well, guys, that I keep talking about every day. Again, one of the many alerts. This is a trend. You know what happens on a trend like this? It breaks out of the trend. It says, you know what? I've had a good time. We've been trending one way for a while, but it's time for me to take another path. And guess what that means? One of these bad boys. Don't you want to be a part of this? You want to be a part of it. All you have to do is be in position. Guess what? You've had multiple chances because I talked about it like 5 days in a row now. This is coming out of an upside breakout. Guess what happened out of the upside breakout? You want to know what this was? 142%, right? Be a part of it. Be a part of it. Brian mentions Ford. Again, EVs certainly do well under volatility. This took a little longer. This did take a little longer. That is not when the rest of the market bounced. So, or I guess it is, but it definitely did not react in a way that you'd expect. So you certainly still have a good price point down here. I don't even know. Let's see. I'm going to take a look at the contracts here. A good example of this would also be to use the options charts themselves. This is something you guys should be. I'm going to start to talk about it a little bit more and maybe bring the charts up on the screen a little bit more as we continue to just develop further. The option charts are really going to be important on a chart like this here today. You're down 2% on the day, but where are the options, right? Where are the options in relation? In terms of exponential moves, think about over here. For this move here, this is about a 2% 15-minute candle. How much did you gain on the calls here? What about the March monthlies at the monies? For the $12 or $11 here, for that 2% move, how much did you get on the options? 15, 20%, something like that. How much did you get on this downside move? What's the exponential to the downside? What's that relationship between the two? How many people sold during this? How many actually, instead of selling, bought all the way down? You'll see it in the chart, just like you see it here. It's important to see the relationship, and I think if you guys go look there, and also every day when you're in these chains, you keep in mind the IV number that you see in there. See how that IV changes based on this price movement, and see which way is it actually trading towards. If the IV is increasing from this kind of move, it's because the bids are pushing it. The bids continue to win out and are pushing volatility to the upside, even though this is a volatile move, but it's actually the bids that are pushing the IV. This kind of situation, I would go maybe use lunch to use some of these things to figure out exactly what you should and should not be doing in terms of buying and pushing, and this might be something to learn from in here. And again, it's usually based on the move of how quick the idea of a whip coming through here. You needed the whip to continue. So you need this to continue, or else you're going to be losing a little bit of that idea of an IV to the upside. It's actually going to flatten the IV and then turn to the downside in terms of potential move, which is going to reduce premium and actually remove your exponential to the upside. So let's say for every 1 point move, you gain 3 points. So for 1 point on the underlying, you gain 3 points on the option to the upside. And let's say for every 1 point move to the downside, you lose 2 points compared to 3 to the upside. That can change quickly. Looking for those and how that changes, you're going to be able to see it on the option chart better than here. So maybe study some of those charts during lunch. Maybe I'll come hit you guys with some at close. show you guys on the chart what I mean. Z is another good example as well. The amount of long-term holds in here, guess what? No one sold contracts during this move. Nobody. There's nobody. You can go look at these option charts. There might have been 2 people selling, right? Good example of a chart that nobody cares. Nobody cares. You're in a trend. Until you break that trend, no one's selling them. Not on the speculation side with options, right? You don't bet against Tom Brady. You don't bet against him. Not even age can beat Tom Brady, right? For all of you Tom Brady haters out there. The GOAT. 7. Jordan didn't have 7. And football there's way more variance in one game. Throw the ball wrong, it's over. Just like trading. You've got one entry and one exit. You've got to do it perfectly, or else you're going to screw it up, right? You don't really get a second chance. So it is tougher. Trading's probably tougher. You don't have GOAT traders out there, do you? You've got the short sellers, and that's it. That, based on a lot of different reasons, are praised. When you said you see it in the Chewy option chain, are you referring to the IV moves, the bid to ask, or the volume in the contracts? So of course I'm not just speaking about one thing. What I'm actually talking about is the chart. The actual chart. So if we bring up the underlying here, of course the chart is going to look very similar to this here, right? Let's say 15-minute. You have data for 15-minute candles. What I'm talking about is the relationship between this downside move that happened here in the relationship to the options. Because we're not trading the underlying chart, we're trading the options, right? During this, are the options selling the same way that the underlying is trading here? Or is all that's happening is that the price is staying the same even as the underlying moves down because volatility is increasing? I know you know that part. So those of you guys know that when you're sitting in a position, let's say the underlying stays the same, but the volatility is increasing, so your contracts increase in premium, right? So you're actually gaining points on your contract. The same thing can happen when a downside move starts due to the fact that the exponential is leaning towards the upside. You're not losing as many points compared to the underlying as you will be gaining on the upside move. So the speculation is that you're actually going to hold the level down here, right? You're going to hold it. So the price is already not moving. The premiums are not losing as much comparatively to the underlying. And what's actually being priced is that if a move does come to the upside, it's actually going to gain an even larger exponential here to the upside because of the new increased IV, because the implied move is higher. And because the underlying did lose points, it got cheaper here. So for instance, if you bought down here, you're going to be making significantly more here than compared to here for the same underlying move. The way you see this is actually in the chart itself. You see it through all the different things. You see it through IVs. You see it through the bid. The bid is, of course, going to be a different price. You may be bidding higher here than you were over here because the speculation is that you're holding the support and it's going to the upside. You may be paying more down here than you were up here. You're only going to see that in the chart, and obviously you can see it in the bids and things like that, but you may see some undesirables just putting random prices. You never know. You'll see it in volume as well because demand is higher. So of course, if demand's higher, then price is higher. The supply hasn't changed. What actually changed was that the underlying and the market moved, but the options probably didn't do anything. I'll come back. I'm going to bring the Chewy charts with us at close. So 4 o'clock, I'll bring the Chewy charts and I'll show you guys what I'm talking about. I know for a fact that you can see this idea over here, and this is where you start to choose whether or not you're going to take profit or not. A lot of the times, if you're sitting in this much supply, you're not doing anything with your options. There's nothing to be done here. You entered over here, you're not doing anything because you didn't lose any value. If you put a stop in at your option price, let's say your contract costs $2, right? and your stop's at $2, you likely never got below that $2 price from here. Almost certainly you didn't, if you have contracts that didn't lose intrinsic value. And I see I just lost internet there a little bit. Sorry about that. You almost certainly didn't, and this would be confirming the upside move. Now, it can be sensitive and it can change, but again, the speculation is the upside because you're going to continue the trend. Those trends are there on the option charts themselves, right? They're there on the option charts themselves, that this trend is there in the contracts. It's just usually you don't have all the other candles back here, right? If they're March monthlies, then you probably only have the up to February 1st or something like that, right? These candles in here that actually matter on that chart, right? Keep those ideas in mind, right? Of the length in which those charts are trading, the options, what they're actually reacting to. I think it's something to incorporate. I'm going to bring it up at close. There's a way to incorporate using the option charts and the underlying chart and using what you know from the way we trade to understand when is the perfect time to be doing what you need to be doing. Sort of like that transition thing I showed you yesterday, right? Where you can see, okay, those contracts are way too out of the money. They didn't even gain anything. But the difference between, let's say for one contract like yesterday, you can make 500 profit in cash. We're not talking percent value. You can make 500 profit for one contract over 3 days on 5 different strike prices and expirations. Each of them gain $500. Do you want to buy the one that gives you $500 profit for $10 or the one that was for $2? The $2 that gained $500 profit is a much better percentage, right? And it's a better cost point. The way you see that is usually in the moment, not through all the charts will look the same. It's usually through that price point being lower. And what you can see is this idea of the move here against the underlying. It'll be that exponential move in comparison to the underlying where you know the sensitivity there of the exact point on that strike price that's actually going to gain you the most value for its cost point, which again is just risk reward. And only by looking at those charts in the moment will you actually see which is the best strike price. You can look at Greeks all you want. You can look at volume all you want. You're not going to know who's going to want to buy that later unless you know the sensitivity of it, which is which contracts are going to be bought from here over here. You want to be thinking about on Friday which contracts are going to be the hottest contracts. That's what you want to be thinking about. Not what's hot right now. What's going to be hot Friday? What about Monday? Because if you're pushing a position over a week, you don't care about what's happening now. You care about what's happening then. And you're only going to see that in the chart because you can't see that through the table. It's a built up over time. It's not just during one day, right? It's about a trend. That's like the short-term patterns we talked about yesterday. It's not just the one candle. It's the 6 trend candles that led into the candle that matter. It's just that last candle is the one that's deciding the trajectory now, right? So I'm going to bring the charts up. We'll show it. Maybe we'll go over that a little bit more to utilize that. That's where when I'm saying buy and fear down here, why do I have confidence that we're not breaking down here? Why do I have confidence? Why do I feel confident to go buy down here, right? You got to be able to figure out the way. This is just from knowing, right? Knowing the possibilities, knowing what's possible is one thing. And then having confidence in what you see and trusting in that because you've seen it so many times in practice, right? These type of ideas, there's a lot of things that come from it, and it's from being able to see we all have the same information available to us. But if you're not looking at all the available information, analyzing it all correctly, then of course your confidence is going to be lower. If you know someone knows more than you on the other side of the trade, you're going to have a hard time taking that trade. So these type of things, you've got to know when this time is, because again, you're trying to get as close to perfect as possible. Selling here and buying here as close as possible. I think I showed that here again today. Just like, I'm going to wrap this up for lunch, take a break. Just like over here, I want to remind you, selling here on that Monday before the whip, buying on the whip, and then selling everything again on Tuesday before this move, and then slowly building a position from Friday, going long, SPY 400s, having some fun, short-term trading, and then going long again, not shitting ourselves on pullbacks here, actually buying on it, continuing the trend. This is having all the information available to you, using it and building confidence through that you're doing everything possible. You're looking at everything possible. Again, this comes down to having enough time. You guys are here because you're not going to look at 1,000 charts a night. You can see the charts and execute them properly. But again, it's about doing as much as you can, right? And through that understanding, you can have confidence. You will have confidence, and you won't be losing your mind every time the market moves. You'll say, oh, this is great. I love it. I love it. I mean, we would love it if there was a little bit more volatility, obviously. This wasn't great. I mean, this is not great. I mean, it would have been nice if we got up to like 26, 27 on the spot VIX. I mean, the derivative didn't even move. Those of you that had this contract, nobody made money over here. You didn't do anything. You quite literally didn't do anything. So this type of thing, like you didn't get much volatility, so this is not affecting the IVs across the board, right? IVs are being affected by their own individual charts, which makes having to look at the option charts themselves so important because you don't have one average. If this is rising, then every IV in the world's rising. If this is down here, every IV is for itself. It's only for its own chart, which is why when you go look at those options, you've got options that got like 110 IV. Some of them got like 10. And it's like, well, which is it? What is the difference? Look at the chart. You'll see the sensitivity, right? So this is an interesting day so far. A lot of learning opportunities and a lot of chances, even on some fun rad. Remember when that was at 2%? Now it's up here. That's a fun one. There's a lot of opportunities out there. Don't fall asleep if you haven't done anything yet. I'd be searching the market and looking for your opportunities out there. Otherwise, enjoy your nap, drink some water, get out of your chair, fix your posture. Those of you leaning over, your back's all fucked up, you're getting old. Fix it. I'll see you guys at close. Enjoy. You need something, I'll be here. Have a good one, guys.